Good morning, everyone. Welcome to the County Council's meeting this morning. Today, the Council will continue its review of the FY26 operating budget and amendments to the FY25 to 30 capital improvement program. The last couple of weeks, committees have been hard at work looking at department and agency budgets, and I want to thank all my colleagues and also our staff for all their work the last few weeks. For today and the rest of this week, as we will be sitting as full council and reviewing the committee recommendations. And before we begin that work today, I'm going to ask the clerk if she'll share today's announcements.
Good morning. Thank you. There are a few updates regarding today's agenda. Item 3.1, income tax rate, and item 3.2, working families income supplement non-departmental account have been added to today's agenda. Item 8, Office of Emergency Management and Homeland Security, and item 9, Fire and Rescue Services budgets have been rescheduled to Wednesday, May 7th. And also we've added item 15.5, the leases non-departmental account, and subsequently has been rescheduled for Friday, May 9th. Thank you, Madam President.
Thank you so much. Thank you for all that work. We're going to start off this morning with a status report and an overview of revenues and expenditures to kind of give us a sense of where we are after all the committee's work on the last couple of weeks. And I'm going to turn it over to Mr. Howard and Mr. Smith to walk us through that.
Thank you, and good morning. As the Council President noted, the committees have completed work on the first phase of the FY26 operating budget review. And as we do each year after the committees have finished, we provide a status report to the Council of kind of where we stand. And as a reminder, all the committee changes that we're going to talk about are tracked against the Executive's March 14th budget recommendation. So the committees have placed a total of $6.0 million in reductions and $45.8 million in additions on the reconciliation list. The committees have also recommended resource changes that would result in a net decrease of $41.5 million available to fund the FY26 operating budget. The resource changes are primarily due to a recommendation to reject the Executive's proposed 3.5 cent property tax increase and to reject the Executive's proposed changes to the income tax offset credit amount, which we will be talking about in more detail later today. No recommendation has been made on the Executive's proposed change to the county income tax rate, and so as a result, that is not included in the summary here today. The Council will also discuss the income tax proposal later today as well. So just to provide a little bit of information on kind of the minimum and maximum based on the committee's work to date. If the Council were to accept all the resource changes and only the reductions recommended to date, it will need to find an additional $35.5 million in reductions or additional resources to approve a balanced budget. If the Council accepts all the resource changes, reductions, and additions recommended to date, it will need to find an additional $81.3 million in reductions or additional resources to approve a balanced budget. And details on the FY26 budget changes recommended by the committees is attached on pages 1 through 3. Over the next week, the Council will review all these committee recommendations. And as a reminder, the straw vote on the Council's adjustments to the FY26 budget will take place on May 15th, and final action is scheduled for May 22nd. One small correction I want to make in the attached summary of committee reductions and additions. You'll hear about this more later today during the Park and Planning budget, but there is an item, a $2.098 million item that is to restore funding to the base budget needs for parks. It has some additional language saying that this is a bi-county item that can't be adjusted after 5/8. That language on the bi-county item is supposed to be with the $65,358 item for central administrative services. So Ms. Dunn will make that much more clear when you go through the Park and Planning budget today, but just wanted to point that out, that it's only the central administrative services item that cannot be adjusted after the bi-county meeting. And with that, I'll turn it back to the Council President for any questions.
Thank you very much. I want to see if anyone on the Council has any questions regarding that overview of expenditures and resources at this time. No, not seeing any questions on that. We will, I'm sure, be coming back to this list throughout the week. And again, thank you to the central staff and everyone for compiling that. So now we'll go to our work sessions on the operating budget and amendments to the CIP program. Before we begin this, I want to remind my colleagues that, as we're working through this week and next week, we are using, as Mr. Howard said, the budget as a base of March 14th that the county executive sent over, and we are looking at, in addition to that budget, the transmitted number of amendments that he sent on April 24th. You have a memo that we sent out to everyone last week regarding process, just so everyone knows as we're going through the different budgets today. If there is a committee recommendation on a reduction and the council is ready to take a straw vote on that, we will do that. If there is a department or agency that has nothing left on the reconciliation list, we will take a straw vote on that department or agency's budget. Regarding additions, we will not be taking up, we will review additions, but we will not be taking straw votes on additions. If there is anything the full council would like to add or an individual would like to add to the reconciliation list, either reductions or additions, at this juncture this week, that will require a motion, a second, and a majority of the council, 6 members voting for that to be added as a reduction or an addition to it, because that's outside of what we got from committee recommendations. So that's how we'll be proceeding this week as we go through the budget. The first thing we'll be taking up is work that the Government Operations and Fiscal Policy Committee did on the property tax rate, as well as the property tax credit for income offset, the ITOC. The Government Operations and Fiscal Policy Committee again met last week and looked at the county executive's recommendation to remove his recommendation from March 14th for a property tax increase. Government Operations and Fiscal Policy Committee unanimously agreed with that and is recommending to the full council to set the property tax rate at the same rate that was approved for FY29, which is a 1.0255 per $100 of assessable base. In addition to that, the committee did take up the county executive's proposal to adjust the ITOC, and given that the committee decided that given that we are not increasing the property tax rate this year, that we would also recommend to full council unanimously that we keep the ITOC at a value of $692 per eligible property. And so those are 2 recommendations coming out of Government Operations. And Mr. Smith, I'll turn it over to you if you have anything else to add.
No, I do not. Thank you for the summary.
Okay. All right. Any questions on that? All right, not seeing any. Please raise your hand if you support the committee recommendations on the property tax rate and the ITOC value. And that is unanimous. All right. Next, we're going to take up and have a report on the income tax rate. This is not something that the Government Operations and Fiscal Policy Committee took a vote on since we just received the request and the resolution from the county executive, which we introduced last Tuesday, and we have a public hearing on that on May 13th. The Government Operations and Fiscal Policy Committee had actually a very good discussion. I want to thank the Office of Finance also for participating in that and coming back this morning so that the full council can review this. And I'm just going to turn it over to Mr. Smith to walk through the packet.
Sure. Thank you, Council President, and good morning, Council. Unlike the last item, we'll take a little bit of time to front load this in terms of background and understanding of what the income tax rate proposal is before the Council. On April 24th, the executive recommended, instead of the property tax increase, increasing the income tax rate from 3.2% to 3.3%. In terms of background, there is a legal requirement by the state that all counties levy an income tax, a local income tax rate, in addition to the state income tax rate. The minimum is 2.25%. The maximum, as approved by the General Assembly this year, is now 3.3%. The maximum had used to be 3.2%. The county council, or this county council, set the rate to 3.2% back in 2003 for the fiscal 04 budget, and has remained at 3.2% since then. Unlike the state and the federal income tax, the county's income tax rate is a flat tax. Everyone gets taxed 3.2% on all of the income they earn and report that year on their state income taxes. The General Assembly has allowed counties more recently to create tax brackets to create progressivity, but currently the county's income tax rate is a flat tax. It is not a progressive tax. In terms of approving the rate, the county council can approve a rate anytime at once by resolution. A simple majority is all that's needed to approve that resolution. There is nothing in the county charter, the state law, or county law that requires any different voting threshold. The only thing that matters in terms of approving the resolution besides the rate percent is the effective year. Typically, the effective year could be the next tax year, it could be any tax year, but the effective year needs to be stated in the resolution. As the General Assembly allowed for this year, and only this year, the county councils or the legislative bodies in Maryland can approve a retroactive tax rate effective beginning January 1st, 2025. That is what the executive's proposal is for this 3.3%. It is retroactive. Most years, the county council could only do a prospective tax increase. The other requirement from the state on the retroactive tax increase, should the council consider doing it, is it must be reported to the comptroller by May 15th, and it will not allow brackets. It has to be a flat tax, as it always has been. Even though all counties are required to levy a local tax, the state does all of the tax work for us. The comptroller collects all taxes for local counties as well as the state taxes. So a resident, a taxpayer in the county or in Montgomery County or any county in Maryland would file with one tax return with the state of Maryland, and the state of Maryland would do all the work to not only double check their tax liability, but also they will make distributions to counties. And as you can see on table 1 on page 2, the county receives multiple distributions throughout the year for multiple reasons from the state in order to collect our income taxes. The biggest items from there is to see that it's 3 tax years that we collect over a span of 1 fiscal year. Most of the income taxes that the county receives is from the prior tax year. So as we're collecting taxes for fiscal 25, that is for tax year 2024, and the same would be true moving forward. This is very different than the property taxes we just saw. Property taxes come in kind of 2 large slugs in September and December, and by January, when the executive is putting the March budget together, almost 98% of the property taxes have been collected, and it's just a small portion that remains unaccounted for that they're estimating in terms of finance. For finance on the income taxes, they do an excellent job estimating given the multiple distributions, the multiple tax years, and the different types of distributions we get. But critically, there is a lag in our collection. I've already noted that in terms of last tax year and what we're getting right now. It also means there's a lag in our understanding of the economic conditions when we're collecting taxes. So as income taxes come in from the state, finance is looking at those distributions and how they kind of filter into the model in terms of economic conditions. But again, tax year 2024, the one we just all filed for, is a very different tax year than what tax year 2025 will likely look like. I've already noted some of the changes to the state law that has been allowed for the current proposal, but the state also changed its tax law for its own taxes this year during the General Assembly. However, most of the retroactivity for the state's law affects filers who are filing greater than adjusted gross income of $200,000, filers that have capital gains. Those are most of the filers that are going to see changes in their returns for tax year 2025. Most filers in the state of Maryland may not see any change because the rates were not changed for those over $250,000, and many filers may not have capital gains that they're reporting. As noted by Mr. Howard during the overview and also during the GO Committee's review, the county will realize about $14.3 million in additional income taxes in fiscal 26, irrespective of whatever it decides for the current tax proposal. This is due to how the state has changed. Sorry, lost it. Itemization, thank you, apologies. Brain is full of a lot of things. I know, I was doing so well. Oh, got that out. They have changed how itemization will work for those over 200,000 AGI, and that is why the county will see additional income taxes from the state's law changes. So in terms of looking at how the county executive's proposal from 3.2% to 3.3% will impact both the county residents as well as the state fiscal situation, council staff went and looked at the income tax statistics through the IRS. It's not a perfect analog, but it's the best analog we have, and it provides data on AGI, adjusted gross income for filers, and the last one we have is from tax year 2024. And so the caveat I gave the Government Operations and Fiscal Policy Committee that I'll also give for the full council is these are filers. It's the returns that are given that we can put data on. It's hard to know. It's most likely households, but it depends on how each household wants to file their income taxes. If they're filing jointly, if they're filing separately, or if they're filing multiple returns. We cannot look at that data. Finance cannot look at that data from the state or the federal. And so we look at the number of returns that are coming in. So generally what I want to highlight from the table that was in the staff packet for the GO committee, most of the county's income tax revenues are generated by returns that are greater than 100,000 AGI. But most of the returns are for those that are under 100,000 AGI, and that just makes sense based on how income taxes work. Most of the returns over 100,000 AGI also report the greatest itemizations as well as the greatest amount of capital gains. In fact, filers, even though the IRS data stops at 200,000 in terms of 200,000 and greater, likely those that are over $1 million are accounting for most of the capital gains in Montgomery County, and that's pretty hard to parse in the IRS data. For those returns less 50,000 and less for AGI, they take advantage of the earned income tax credit that comes from the federal government. Also, that makes sense because of how the restrictions for that particular earned income tax credit works in the AGI requirements. In order to get close to 50,000 AGI, you need to have more children in order to get the higher benefit. The most important thing is that the fund is not received by all those that file under 50,000 AGI. It's about 17% received a refund in tax year 2024 based on the IRS data. As will be noted by Ms. Gosalia during the Working Family Income Supplement, the state and the county's refund works a little differently than the federal refund, although it uses as the basis. And so, as noted in the staff packet, based on historical averages, we would estimate about 20% of the filers in Montgomery County that make less than 50,000 AGI or report less than 50,000 AGI would receive the benefit of the Working Family Income Supplement. Moving on from specifically filer, or just highlighting a few more items with filers. So in terms of the state law changes and the county executive's proposal to increase to 3.3%. Staff broke it down based on AGI again as a loose measurement. So for filers with less than 50,000 AGI, there is no impact likely to them from the state law changes unless they have some minor capital gains. Obviously, the impact from the county executive's proposal to go to 3.3% will be based on how much they report on their income taxes, because I said earlier, the county's income tax rate is a flat tax rate. And so under the proposal, for every $1,000 reported, a new additional tax dollar will be needed in order to meet that proposal. Certainly, most of those making less than 50,000 would potentially benefit from the Working Family Income Supplement, but again, it's not 100%. It's probably around 20% would benefit from the executive's proposal to increase the Working Family Income Supplement, or just benefit from that program generally. For the middle tier of 50,000 to 200,000 AGI, again, most of those residents would see a modest increase to their income tax rate based on the county's proposal. They are likely not to see much of an income tax rate increase or liability from the state proposal. Their base rates were not changed. If they are close to 200,000 AGI, they might see some potential changes in their itemization if they have greater than 200,000 AGI when they start their or when they finish their income, but then they have itemization. But most of these would not see much of a change other than a modest increase from the county executive's proposal. And then finally, the AGI greater than 200,000, these will have the greatest impact, both because the state's law has changed and as well as from the county. And based on both the impact for capital gains and itemization. Moving on to impact of county's fiscal situation, and I provided an updated table on the cover sheet to provide both fiscal years. Give me a moment just to get it back up, so I'm quoting the right numbers. So Finance estimates that if the council approves a retroactive tax increase for tax year 2025 at 3.3%, an estimated $75 million more would be generated in revenue. Obviously, if the effective date is later than 2025, if using 2026 as the effective date as asked by the council president during the GO committee, it's only $25 million, so a $50 million delta. If we look at fiscal 27, if the effective date is retroactive to tax year 2025, it's estimated that 27's revenues would be $65 million. The primary reason for the delta there is that finance is estimating that there will be some makeup payments because the retroactive nature of the county executive's proposal. And so we've already collected distributions, as I noted earlier, from the state comptroller for quarter one and quarter two, or close to quarter two of 2025. coming soon. And certainly if the council would approve a retroactive tax increase, it would take some time for those makeup payments to filter into the system for us to get distributions. And so finance is estimating about $10 million more than what we would get normally because of those makeup payments. And then for tax year 2026, it's estimated that fiscal 27 would be $57 million. And again, going back to the fact that the tax increases and income taxes distributions are 3 fiscal years, it's going to take multiple fiscal years to us get to the kind of maximum amount that finance estimates. As the council staff noted, that even with those estimates, income tax is one of our most volatile taxes, primarily because of the county residents account for a lot of capital gains in the state of Maryland. That's one of the reasons why county residents are going to fund a lot of about 45% of the additional income tax that the state's realizing. And because capital gains are behavioral, not statistical, like it takes time for residents and individuals to decide if they're going to realize capital gains through sales of businesses, through investments and other things. And some years they take them, some years they don't, some years they shift them to other tax years. And that volatility is a lot of that behavioral change is a lot of the reason why the county's income taxes are volatile. And as you can see on chart 1 on page 7, the delta or the difference between what the council has approved each fiscal year from 05 to 25 and how much we've actually realized. And so finance, again, does an excellent job of estimating, but there's always a delta between where they're at. And recently the deltas have been to the county's favor, but there's definitely some years where the delta is not to the county's favor. And that certainly may be one of the situations, as I did during the Government Operations Committee. I'm not going to belabor the federal changes that we've all been experiencing, that many of our residents have been experiencing, not to belittle it or to minimize it, but the reality is we just don't know how the income taxes will look in the county, both as federal employees are losing jobs or shifting jobs, as trade and other policies impact business decisions. And so all of that is not considered currently in the finances estimate because we just don't have any data to realize it. And it will probably be later this fall when we get the December fiscal update, or that the council and the county will have better understanding of what tax year 2025 will look like. And so with that, I will wrap it up and hand it back over to the council president, and happy to answer any questions you all have about this packet.
Great. Thank you, Mr. Smith. Thank you for reviewing that. And I'll also note there were a couple of questions that the committee had that are on the first page of the packet that folks can look at regarding whether or not there will be penalties for underpayments, and the BRFA, the Budget Reconciliation and Financing Act, did include a provision that waives interest and penalties incurred due to the changes in the state law, and a couple of other things that people can look at in the packet. Ms. Feldman, before I turn it over to my colleagues, first I just really want to thank the Department of Finance. We know this is a incredibly difficult time for everyone, but also those who are tracking the many changes that you have. And I appreciate the conversation we had last week in government operations. And as you talked about how the Department of Finance looks at and makes estimates moving forward, the data you use, and I thought if you wouldn't mind just repeating that a little bit for everyone here on the council, just because I think it's helpful, as Mr. Smith noted, we are living in a very volatile time. And a lot of the changes that are happening from the federal level are hard to predict right now, because we look backwards lots of times to make estimates for today and into the future. And so I think it's just helpful for us to know how you all are proceeding over the next couple of months next year as you're looking at changes in our economic outlook.
That's a heavy lift to remember what I said last week. Nancy Feldman, Department of Finance. I think that the first thing to comment on is that we look at this every day with the information that we see. Unfortunately, we see mostly anecdotal information right now, a lot less specific data as it relates to Montgomery County. Part of that is county level data tends to be delayed. Report if we were a state, obviously the state gets much more current information, whether it's related to unemployment or employment or personal income. So we're monitoring what we can. And we are getting ready for our meetings for the revenue estimating group. We have a report due to the council and the executive on May 15th. We have a technical committee meeting this week where we're going to take the opportunity to look at the forecasts that are coming out from some of our assumption providers, whether that be Moody's Analytics or Standard S&P Global, I guess is their name now, and among others, to try and see what we can glean from that to discuss with the revenue estimating group so that we can produce a report that helps us look forward as best we can. We'll continue to do that work on an ongoing basis. We have a follow-up report due September 15th. We're not going to sit here and wait until September 15th. We're going to start seeing some income tax distributions at the end of May and some in June and July, smaller ones in June and July, where we may get some direct information about income and income tax payments. The thing that is difficult for us to expect that we're going to get information before the fall is for those federal employees who took a go home and we'll pay you till September option, that they can't file for unemployment that we're aware of, and therefore they're not unemployed. So their income is expected to continue, and so we're not going to see changes in withholding, which is sort of our most current piece of information, until after that occurs. So if somebody retired, they will have a change in their income potentially to a retirement or a pension income, but they will also not be considered unemployed because they're no longer part of the labor force. So there's a lot of moving parts. And I wish that we were smarter than the average bear, but we're not. And so we're going to do the best we can with the information that we have available to us.
Thank you, Ms. Feldman, and I think you all are doing a great job and really appreciate all the work. Council Vice President Jawando.
Thank you. You handled that tough question well. And really appreciate your work and the staff's work. And I was able to watch the GO session. Appreciate the GO committee for their work. A couple just framing questions for whoever is best to answer. Maybe start with you, Mr. Smith. You mentioned just to talk about the income tax amounts. So the retroactivity, 75. Well, backing up. Good news is we voted 11-0. There's no property tax increase. So I think that we kind of just sailed through that. But I think that's a bit of news. So that's good. We're happy about that. $75 million if the income tax is made retroactive, which is the county executive's proposal in 2025 is the best estimate based on all these factors we talked about. And $25 million if it's 2026. Or and then in between if it's somewhere in between.
Correct. So the staff report included the council can do 0.01%. So they could do 3.25, 3.26. The council president had asked, and that's in the staff report, but the table on the cover page is just 3.3% at retroactive in tax year 2025 or prospective in tax year 2026.
Got it. The retroactivity. So my understanding is obviously the state increased taxes and cut taxes for some, a little bit of both. I want to talk about that in a second. Their increase was retroactive. Correct. And my understanding is that they always, in recent memory, it's always retroactive, starting January tax year, or as far as I know.
I can't speak to that. I don't.
But this one was retroactive.
This one was retroactive for the items they changed. Yes, I don't know about
finance. No. Okay. That's my understanding. I look back a few, the last few times, but and so that. The impact of that on, you mentioned that it's filers over 200K that make up most of the revenue increase. So that would be true for the county income tax as well, correct?
Yes, as shown in the chart, the filers over 200,000 will make up the largest portion. However, filers under 200,000 for the most part were not touched by the state's income tax changes, and so they would pay they will have a slightly higher tax liability if the county raises its income tax as opposed to what the state did.
Well, yeah, because one of the things is just we're thinking about, glad there will be no prepayment penalty or fees, which is something I was concerned about as well, but it's just the administrability of people trying to update their return. And so my understanding is that 94% of people in the state either got no increase or a slight reduction based on the actions at the state level. So if you got a slight reduction or increase, if you're in the wealthier brackets, you're going to have to update your taxes in that regard anyway, correct?
Yes, the filers, when they get to next year, 2026, and they file, unless they're in the highest echelons, they will just do their taxes like they normally did,
Right.
and they will update the rates, the deductions, the standard deduction, whatever they take. As noted, I cannot speak for the filers, the behaviors of filers that are in greater than 200,000 AGI, because they're just making decisions in terms of how they want to do quarterly
Right, I'm talking about
payments.
the lower end. I'm
Okay,
talking
my
about the lower
apologies.
end.
Thank you. Yes, for the most part, most of them will likely not change anything until they get to tax year, to 2026 and do their filing for 2025.
And that would be true for the state changes or any potential county changes.
I was only speaking to the state changes. In terms of county changes, I'm not sure how employers would handle the county's change to withhold in tax year 2025 retroactively.
Okay. Do we have, finance have any thoughts on that?
Our expectation is that if a filer wanted to avoid having to make a, referred to in the packet as a make-up payment or a catch-up payment, they can file estimated taxes during the second half of this calendar year. They can change their exemptions on their, I think it's their W-4, or they can wait until they file in April of 2026. It does go to behavior.
Right.
It also goes to financial ability to weather estimated tax payments and or higher withholdings.
Got
So
it.
it's a choice.
So for example, if you're the $100,000 earner teacher, you could decide to pay $25 a quarter to meet your $100 change, or just wait and pay the $100 additional liability all when you file your taxes in April of next year.
That is correct, and I think the point was made a moment ago that the BRFA, the Budget Reconciliation
Right.
Finance Act,
No
said there's
penalty
no
no matter when you
penalty
do it.
for late payment for the changes
Got it.
that have occurred. If you had if you were late on the rest of your problems,
Right.
it would probably,
Right.
your income, it would probably still have penalties.
But not
associated
related
with
to
it.
this change.
Correct.
So you could just file normal like you would next year and you just have whatever additional liability if you fell into that category.
That is our understanding, yeah.
Okay. And then for the $50,000 and less, I know we're going to talk about this a little, and I can maybe hold this, but it's obviously related, and you mentioned it for the WPA. What would that mean for those filers as far as how would it impact the liability that they would have? I'm assuming it would go, you said it would go down for about 20%. I'm not sure I understood that.
Certainly. Thank you, Vice President Joanna. So the note is that based on IRS statistics data, it's not 100%, it's less than 50,000 that receive a refund through the Working Family Income Supplement, and based on the recipients from finances data, which again in Ms. Cosalia's packet is included, and we'll get to that in a minute, it's about 20% that's less than 50,000. So certainly, based on the executive's proposal, their refund might increase some for that 20%, but I think the note there was that it's not a guarantee. It depends on whether you are eligible for that particular refund or not.
Got it. Okay. So some would see it, some wouldn't. And then just I guess the last question I have for now is I'm thankful that the county executive pulled back the property tax and suggested this. I think it's a much better way to go. Based on our first report, it was $81 million, and I know Mr. Howard's up here now, but you did the report too. If you took everything that went through committee plus minus change, 75 million estimated if you do the 3.3 across the board. So I'm assuming that would leave a delta of 6 million ish if you did everything that the committees did. Okay, got it. Okay, good. And then obviously if we could, again, it could change depending on where we are. I think this is a real viable option. I'm glad we're discussing it. My colleagues know that I do have a lot of interest that we have the authority now to actually make this a more progressive income tax. My understanding is that we could do that for tax year 26, but just can't do it for tax year 25. Is that correct?
That's correct. If you want to increase the 3.3% for tax year 2025, which is retroactive, the state restricted brackets and said no.
But if we wanted to, so that would apply to that tax year. If we wanted to come back later in the summer, fall, spring, and change it for the following year, we could bracket it at that point.
Yes.
Is that your understanding?
You could. My understanding is the notification to the comptroller's office is, I don't think you can just do it in September. I
Right.
think it has to be done by July 1st.
Right, that's right.
So that if you were to do it this July 1st would be for January 1, 26.
Right.
Next July 1st, January 1, 27.
Right. So if we wanted it to have a tax year 26, we'd have to pass it before July this year.
I believe that's
Got
correct.
it. Yeah, that's right. Okay. Thank you. Thank you, Madam President.
Thank you. Councilmember Albanaz.
Thank you. So, there's obviously multiple conversations here. There's the discussion over the overall wisdom of increasing taxes, period, in light of the volatility and everything that we have before us. That's a policy decision for sure. But I guess if you look at the chart that is on page 7 that goes over chronologically what happened and the history of us receiving a percentage change from approved to actual income tax revenue in those years that it went down significantly, particularly fiscal year 2010. Mr. Spence, could you talk a little bit about what would happen if our best case scenario, the projections that we've laid forth, don't come to fruition and we do have to make some significant changes? I believe that would result in the possibility of a mid-year savings plan, or what other recourses would this body have? We have reserves that we could tap into, but can you talk about what that process would look like if the forecasted projections that come back later this year are much worse than we thought they were going to be, and we don't know what they are right now? What would this body have to do to make up for the adjustments?
Certainly, thank you, Councilmember Albanaz. And you've already touched on the primary mechanism. I mean, certainly finance staff and the county executive's office will have the initial understanding of what's coming because they're the ones that collect the data and they can see it coming. And certainly if the delta, as it was in fiscal 10, is 15-20% over what was approved by the council and for fiscal 25 or fiscal 26, my apologies. Yeah, I mean, it would either need to be reserves or a savings plan in order to maintain the balanced budget going into fiscal 27's operating budget conversation. But that a savings plan would need to be recommended by the county executive, and so they would have to parse through the data, the delta in terms of revenues across the board, not just income taxes, and make a decision, and certainly include the council in that process at the right time. But yes, the two you said is the primary ways to fill the hole.
And I just know this in the first person that the county's policy, if a reduction has to be made, and as we know, over 80% of the county's budget is in personnel, I don't know what the total figure of additional positions we're projecting adding both in the executive branch as well as in MCPS, but it's in the thousands. And if a reduction did have to be made mid-year, that would likely mean people who were recently hired, as per the county policy, the last folks hired are the first ones to have to go through a reduction in force process. Is that correct?
That is correct for the county's policy. I'm not as versed on MCPS's policy, but I assume it's similar. Also, the other thing that happened, and you're also familiar with this, is furloughs, and there's other ways to fill personnel holes. But if the decision is that the number of positions need to be reduced, it will be the last in, first out.
And while there's active volatility even within the federal government, whether people take buyouts, when those buyouts go into effect, There are still a number of positions that are caught up in legal battles right now. And there are perspective, there was an article recently that the administration is targeting 40,000 additional federal government jobs that they're hoping to reduce by this summer. And of course, the majority of those impact our region and many of them here in Montgomery County. But we also don't know the volatility of the ripple effect that that has on government contractors and other businesses that are affiliated or associated with the federal government or that receive significant federal grants that impacts our biomedical sector as well here locally. So the volatility overall within our income tax bracket is obviously keeping all of us here up at night, not knowing exactly what the full implications will be and where we will end up. I guess the last question for now is, when will we have, what are the time frame of the best case scenario updates that we're going to receive? What tax information we will receive from the federal or state government? Where are the clues that are going to happen, or are we just not aware? So is it the fall that we expect to really have better baseline information, or is it this winter, or is it this summer? What's the time frame where the picture is going to become more clear?
We get distributions of withholding and reconciliation income tax payments. May is a big one for now, but that is related mostly to 2024. That's when everybody files their taxes and sort of catches up for what might have occurred in calendar year 2024. So going forward, we will be receiving distributions from withholdings. That tells you how many people are working to some extent, right? Because we can see patterns in that. My best guess is probably after September, unless something unusual occurs with respect to the federal government and the buyout program. I think one question was asked last week, which has been responded to in the updated packet, which is, where do people file their unemployment returns? And they file them where they work. A follow-up question to that was asked is, do we share information among states or local governments? And to the best of our understanding, it's only shared for the purpose of fraud prevention. So people filing in 2 states, as opposed to letting us know where our residents, the residents who filed, are located. And so our best information will come from our withholding information, and then also about 2 months delayed on employment data from QCEW. It's one of the quarterly census of employment and wages, where we might start to see some information on our county employment. So I'm going to say no earlier than September, but we're watching all the indicators to see if there's something else that triggers a further review.
And related, unrelated, assessed property values. So they've been dramatically increasing over the last 12 years in particular, with this most recent cycle being one of the biggest that anybody's ever seen. When will we receive, if the market flattens out or, God forbid, decreases, what would the time frame be for us receiving assessed property values, and how would that potentially impact the proposed FY26 operating budget?
I think it was mentioned a moment ago by Mr. Smith. At the point we put the budget together, we know with pretty good certainty the majority of our assessed values and property tax for the upcoming collection cycle. So January 1 of this year, which we get updated on a monthly basis, we've updated for the budget recommendation to the best of our knowledge. So property assessments for FY26, absent appeals, and I'm going to have Mr. Foley King talk about appeals in a second, are pretty solid. When we start seeing appeals, if they are significant, that could impact our assessments because they go into effect, what I'll say, immediately for that current fiscal year. So do you want to take it a little further?
Todd Foley King, Department of Finance. As my colleague noted, on January 1st, we received a report from the State Department of Assessments and Taxation with the anticipated assessments for all properties in the county, about 350,000 properties, for their anticipated assessed value for the upcoming year. We then get a report monthly with how those assessments are changing, and the report that comes out in July pretty much corresponds to the bills that go out that month to property owners to be paid. We track January, we track July. The delta between them is the sort of sum effect of the appeals that have occurred through that part of the year. It is generally a fraction of a percent, and we adjust for it in our model, taking where we're at in January and cutting back slightly for the anticipated appeals. One detail is that homeowners can appeal at any time. There are, prior year payments, which is that balance of somebody appealing a tax year from the past and either generally receiving money back if they won that appeal, and that is also a fraction of percent of the revenues in the model.
Thank you. So I'll just note that fiscal year 2008 was when I believe the property assessed values went down. It's the last time they've gone down, and then of course the perfect negative storm, because then you see in FY 2010 is when almost 15% reduction in what we had projected for income taxes. And that's, of course, what led to those catastrophic reductions that we had to make. And it just, I talk about it often because the scars are never going to leave me. It is something that I just, in the back of my mind as we're having this conversation, the conversation we're going to have over the next few years, and why all of this just gives me so much pause. I yield back to you, Madam President.
Thank you. Councilmember Sales.
Thank you, Madam President, and thank you to staff and OMB for all of the projections. I just wanted clarification because I know there was a lot of concern about the retroactivity. Do we have to, if we choose to support the county executive's recommendation, do we have to support the retroactivity, or can we request the brackets this year over retroactivity?
So the council can pass a resolution however it wants. So if they want to pass tax brackets, it would need to be for tax year 2025. I'm sorry,
2026.
That's a bad slip. So yes, for tax year 2026, the council could certainly adopt brackets.
Okay.
Just to benefit my colleagues in finance, I think doing estimates on brackets at this point in time would be challenging for tax year 2026 based on what we talked about earlier, that you would need to notify the comptroller by July 1, 2025. And that's a different level of analysis than I think we've ever done. But I'm buffering that right now in terms of a budget and whatnot. But certainly the council could adopt tax brackets for tax year 2026 if they want,
But not for
tax year 2025.
Okay. And okay, that was my question for now. Thank you.
Great. Councilmember Fanny Gonzalez.
You're not gonna like this. Guys, I said it last week, I'm gonna say it again. Numbers don't lie. We all wanna pay, we wanna do the right thing, but this year is so complicated. What's happening at the federal level. I had neighbors, I have friends who have been laid off, people who decided to leave their jobs by September, but they won't file. People who work in DC but live in Montgomery County, and so on and so forth. There's so many uncertainties right now. We do not have the data. We just don't. You're not gonna get the data until in the fall. You have no idea what's happening. No idea. And I'm not blaming you. It's outside your hands. And the fact that you know, and I don't mean to attack the county executive. I really don't. I'm just talking about the facts. Let's do a property tax increase. Oh no, let's not do that. Now let's do an income tax increase. Days apart. And now having the council to solve this is irresponsible, especially when we do not have the data. We don't have the numbers. Next year, it's a different story because we're going to get data in the fall, in the winter time, that can prepare us to make sound decisions for the next fiscal year, not this year. I just don't feel comfortable, and I just don't think it's right. I just cannot see myself voting in support of a tax increase, an income tax increase at this point, that was given to us as a proposal, 2 weeks ago? Crazy! It's insane! And I can't do it. Again, numbers don't lie. You really want to be responsible and make sound decisions because we were elected to make sound decisions based on data, based on facts. We don't have that right now. And it's not like I don't want to support all the different needs and things that we have in this county. I do. But let's meet the reality. And I just wanted to share that right now. And I think you can read between the lines and see how I'm going to vote on this one. That's all. Thank you.
Thank you. Councilmember Balcom.
Similar sentiment, maybe not the passion, but
I can help you. Let me.
I'll channel. Okay. So a couple things. One, the retroactive aspect. I have a lot of concerns about this. You know, our residents will have tough choices to make if they're even aware that this is happening, right? Because when we passed the increase for property tax, most people weren't aware until they got their bill, right? That's when we heard. We didn't hear about it. We heard it from some people inside the bubble when we passed the tax increase. When we really heard about it was when they got their mortgage increase from their bank. So same thing's going to happen with this. So people might change their withholdings. People might file an estimated return. The vast majority won't. The vast majority will have to pay at the end of the year when they do their taxes. So I think that's a concern for me for the retroactive. But also, given the the federal government layoffs, some people will be paying taxes on jobs they don't have anymore, right? And I think that's an issue, and I know some of my colleagues have mentioned that publicly. So I am not in favor of the retroactive. My concern about the income tax overall, similar to Councilmember Albornoz, the volatility of that tax, and we know that residents are impacted. We know, we hear about that. We're spending a lot of time and energy helping those individuals. So we know that our tax base is going to go down from the federal government perspective, and income tax most likely will go down, which to me, in essence, means that we're almost using one-time money to pay for ongoing expense. Now, I know that in general, that's the nature of income tax. We already have a 3.2% income tax, and we deal with that volatility all the time. What's different about this is that we know that the tax base is going to go down because we are experiencing these layoffs in real time. We all know individuals who have been laid off, personally know them. We also know because of our constituents. So I have real concern about the volatility, the nature of the income tax, and certainly am not in favor of retroactive. Thank you.
Thank you. Councilmember Friedson.
Thank you, Madam President. Thank you to colleagues. Thank you to finance and to council staff. This has been really helpful and also has highlighted some of the challenges that we have here in trying to navigate through very difficult circumstances with a lot of unknowns. And we've only shared the known unknowns, and we don't know the unknown unknowns. And I think that is a real challenge. I have spoken quite a bit about the property tax. I've spoken quite a bit now about this retroactive income tax that has been put forward to replace it. I have real concerns about swapping one tax increase for another tax increase in this moment in particular, as families are struggling in deeply uncertain times. I have real concerns about a retroactive income tax on residents and wages for jobs they no longer have, as Councilmember Balcom noted as well. And I'm particularly concerned, as Councilmember Albernaz was noting, that the message that we'd be sending, if things don't turn out in our rosiest of circumstances, to add to that uncertainty, where all of the disruption is happening for thousands of our county's residents who are part of the federal workforce, who are dedicated public servants, as they are being laid off and let go in the most inhumane of ways. If we are forced to make horrible decisions because of revenues not coming in at the level that we expect, and having to make some of those choices under much more humane circumstances based on much different dynamics, but the message that it will send to the community won't be all of that dissimilar. And that is a real concern if we're setting ourselves up with tough decisions today, but impossible choices that we're forced to confront in the months and the years ahead. So I'm just really, really concerned about that. I just want to note a couple things on the going progressive in terms of the brackets. We would have to do that by July 1st. Is there a separate public hearing that would be required, or a public process to formally notify the comptroller of that?
I do not believe there would need to be a separate public hearing. The council's already advertised one for this particular resolution, going to 3.3%. The state law is only concerned about the maximum rate when it comes to advertisement. In terms of notifying the comptroller, we just would need Department of Finance to give the comptroller the tax brackets the council adopts before July 1st, 2025.
So ultimately, this notice could serve as moving in that direction if that was the will of the body.
I think so. I would like to double check with the council attorney on that one, but based on how the state law is written, it does not concern, the advertisement is only concerned about the maximum rate, not tax brackets.
And not year.
And not tax year, correct.
Okay. All right. Well, if you could check on that, I think that would be helpful, because the way that we're talking about it, I think would be important. I also think it's important to note what we're discussing here is to have the public hearing for this is May 13th. Is that correct?
Yes.
And when would the decision need to be for this tax year?
Before May 15th.
Before May 15th. So there's going to be a public hearing on May 13th, and the council is going to have to take action prior to or on May 15th. So within 48 hours.
Yes.
The council will have to make a decision on this. Okay. All right. I just want to note that. In terms of the revenue picture, and Councilmember Balcom was also noting this in terms of ongoing versus one time, the 75 million is mostly ongoing expenses. Is that correct?
Most of the estimate, yes, would be ongoing in some way. I think, well, yes, we'll leave it at that and see if you have a follow-up question.
Okay, but not all of it is, right? Because some of the 75 million are the catch-up payments, and so it's basically a double dip. So you're basically getting 2 tax years in one, and so you only get 1 year of the double dip, and then after that you only get a single dip.
Correct. And I think that's shown in the table on the cover
So-
page where the fiscal 27 is less than fiscal 26 is estimated for the.
Yeah, so the 81.3 million, I think the number was, in terms of the gap, how much of that is ongoing versus one time?
So we would have to double check that. I believe most of the expenditures on the list are ongoing expenditures.
Okay, so I just think it's important to note, and I think this is the point that Councilmember Balcom was identifying, it's not a one-for-one revenue source in terms of the 75 million being some of which one time and some of which ongoing, and the 81.3 being mostly ongoing. But we have to, reconcile that. So if that could be reconciled and shared with us, I would very much appreciate it. My views on this are well documented. Let me turn to.
Sorry, apology to interrupt. I did get a note from our council attorney. The public hearing on May 15th would also, you could adopt brackets for tax year 2026 if you want on that public hearing. The deadline for that would be July 1st to give to the comptroller for tax year 2026. But I just wanted to, since we were here in the moment, give council that information so there was no question about whether that public hearing would work or not.
Okay.
It's May 13th, just.
I'm sorry. Yes, May 13th.
Yes.
The public hearing is May. It gets confusing because they're so close together.
Yes.
I'll just note that, and I'll let others make their own judgments on what that means. But May 13th public hearing, decision by May 15th. And do we think we're going to have a revenue understanding before May 15th on what not doing retroactive but doing progressive would look like in the out years? I know you talked about how difficult that would be in preempted finance, but what understanding might we have at that point when we're going to make the decision, if we're going to make the decision to move forward with
Okay, so just
a
for
more progressive
clarification
model?
purposes, the notification on May 15th to the comptroller is only for the retroactive.
Right.
Okay, so May 13th is a hearing, and I understand your question, which is, how do I decide if I don't have revenue numbers for each? We have to figure out brackets. The state gave us the option, I believe, to choose among certain brackets. The law, I need to double check. There was a proposal to increase the number of brackets. I do not believe that passed.
Correct, although I will note that the state law allows the county to create any brackets they want. They can be the same as the state brackets, or they may be different.
Okay. There was a proposal with specific brackets that may not have, I believe that did not pass. So we would have to, have a target in order to figure out what that might mean. So for instance, and just to make it clear, if you were to have brackets and increase the top rate to 3.3%, that person who's paying 3.3% would benefit from all the brackets below. So the first $50,000, whatever that bracket would be, that person at the top bracket would have $50,000 eligible for the lowest bracket, just like
Now, that is the nature of the progressive income
right?
tax
Not everybody knows that,
model,
so
that
I
the
apologize.
first amounts that you have in are taxed at the same level as everybody.
Correct.
And it just, as you go up, this is why there's some myths about, paying taxes in terms of, who pays what. The challenge with that, I would just note to everybody, is it's just a revenue loss.
That
So
is-
at this point, based on the numbers that we have, so it's important for us to note that. I will note the May 15th dynamic here. We might have till July 1st to make a decision for next fiscal year, but if we're going to make a decision that has any impact on this budget year, it would have to be done essentially by May 15th also. Because if you're starting at January 1st of 2026, for to not do retroactive, in order to get any revenue and think about that revenue for this budget, we have to understand what that revenue picture would actually be, or we can't budget towards it. And then the other, question and dynamic here is when we actually expect the revenue, and from a balanced budget standpoint, because of the cycles of when revenue actually comes in, when is a reasonable expectation for closing out of a fiscal year in terms of revenue receipts to the county? Can we budget off of an increase?
So the timing, I'll go with the easy one first. The timing, if you were to pass a progressive income tax for January 1, 2026, there would be some income in FY26 from withholdings. There would be time to change for people to adjust and for withholding payments to be made to us based upon that set of tax brackets. So we would get some in FY26. How much depends on the brackets and, and whether, all of the things we've talked about today that we don't know, whether we know more in order to assume what those payments, but only 2 quarters, for 2 quarters. So January to July
Right.
could occur in FY26. So for us to do the estimates on brackets, we can back into some ideas, unless you have ideas that you'd like us to run.
Yeah, I mean, but here's the issue. The issue is to reconcile all these different dynamics.
Yeah.
What we heard earlier, which has been my experience and which has been borne out over time, is that the disproportionate amount of revenue is coming from a very small number of high-income earners, mostly from capital gains. Overwhelmingly, those are not withholding taxpayers that are making their money through wages. They're likely paying estimated taxes, and they're likely paying those estimated taxes on a quarterly basis. The time at which we receive that revenue for folks that are going to pay those on a different timeline is going to be different, and the choices that they make are going to be different. That's the volatility in the income tax. So the money that we're going to get is the less volatile in earlier on, but it's also the most unknown, overwhelmingly most unknown, because the major fluctuations happen in capital gains, and the major fluctuations happen among a small number relatively of high income earners, business owners, those who are selling businesses and selling large amount of stock, et cetera. Is there any way that we're going to know or have even a reasonable sense of that between now and the next 10 days? I mean, just real, and I'm not asking you to do something that's unrealistic. I just want to be honest about what we have to work with here.
Well, just one point to point out in the updated packet that Mr. Smith put together, 60 to 65%, that's an average for range of our income taxes received from withholdings, from wage and salary. Your point about the other portion of it, proprietors' income, interest, earnings, rents, capital gains, they are not all received in quarterly distributions based on withholding.
But the volatility is
And the
coming
volatility
mostly
comes
from the
from there.
40%, right?
It does
Yeah.
come from there. And it is, today is May. We have no idea what capital gains are going to look like in calendar year 25 until it's over or close to over. And people behavior affects how capital gains
Right.
work. People do get capital gains even if the stock market is down year over year, because their individual investments may have capital gains during the course of the year, but that's their individual information.
Generally, it's actually the opposite. Generally, there's kind of a sugar rush in terms of revenue, because what happens is as the stock market is crashing, people are selling, which is the taxable event. And so that's actually where you get a revenue pop for a temporary period of time, but it precipitates then a dramatic drop off. And that's what Councilmember Albornoz was noting earlier. That's where Lehman Brothers falls in August of 2008. It wasn't until 18, 19 months later when revenues fell off a cliff. And so that's what we have to be mindful of, at least, of whether there's the revenue here is worth the level of uncertainty that it's creating and the potential difficult choices that we're making even more difficult moving forward. Thank you, Madam President.
Thank you. And I just want to clarify one thing. I understand that the May 13th public hearing is rushed. We are bound by state law in terms of when we had to notice this, because we didn't know we had this authority until the very last day of the session in Annapolis. So when we could introduce notice and I know it is not ideal. But I just want to be clear of why this is timed in such a way. There's a lot of things in this budget this year that are not ideal given the context at the federal level. But we are all doing our best to do that. But I just wanted to clarify why the public hearing was scheduled for May 13th. Councilmember Glass.
Thank you, Madam President. Thousands of our neighbors have been fired by Elon Musk, and now there's a proposal to raise their income tax retroactively. That is insane. The economic anxiety in our community is palpable. I see it when I'm walking my dogs in the morning from neighbors who were first fired by USAID, and then NIH and FDA and HHS. And there's a proposal to raise their taxes retroactively. As the council president noted, this was approved by the General Assembly very late into session. The last day it was passed. My understanding is that Annapolis proposed this and passed it because there were concerns about large pension shifts for the school system. The county executive's budget had some wiggle room regarding pension shifts, and we didn't quite know how big they would be because Annapolis was working it out. And one of the remedies that they had determined was to allow revenue enhancements, AKA the income tax piggyback increase, to facilitate any shifts that they might send. The shifts did not manifest as large as we feared. And so to use this mechanism to pay for something that it was not given to us to pay for doesn't quite add up. There is only one other jurisdiction I'm aware of in Maryland that is looking at the income tax, looking at an income tax increase right now, and that is the city of Baltimore. And what Baltimore is proposing is increasing the local income tax to offset property taxes, not to just raise revenue, to offset property taxes. If colleagues in the county executive are interested in restructuring our tax system, I'm all for it. Let's do it. Let's roll up our sleeves. It might not be, well, it's not going to be this year, but we could do it for next year. We could do it the year after because it's complicated. But that's what Baltimore City is doing. And so this clearly is not right for right now. And I just want to share real quickly conversation I had with a father in Rockville just last week. He asked me my thought on this, and I expressed concern. And he lives with his daughter and his wife, both of whom used to be federal employees, and he is now the sole breadwinner. And he said, please do not increase my income tax. My two family members no longer have a job. I yield back.
Thank you. Councilmember Lukey.
Thank you, Madam President. I want to thank the GO committee and everyone assembled up here. I did listen to the full committee hearing from last week, and I appreciate the level of detail you all brought to the discussion in, challenging times when finding ways to project things is quite difficult. And so I want to commend the work that you were able to do and bring forth, because this has not been easy. And also to focus on three reasons why I am opposed to doing this. First, and the council president did interject about this, want to make clear the logistics that we are under are the result of the circumstances of the General Assembly, what the comptroller's office can or cannot do with its systems presently, and so on and so forth. We are doing our best. And we will continue doing that. But also, knowing, and thank you for highlighting that any changes that might need to be in effect if we were going to take action for January 1st, 2026 would need to be done by July 1st of this year. I don't think, I don't think we're in a position to increase the tax now. Retroactively, nor do I believe within the next 45-ish days we are going to have any greater clarity that's going to say, yeah, you should definitely move forward with this. And that brings me to my next point, which is, to Councilmember Glass's point about the family he spoke with last week, the gentleman he spoke with last week. Read the audience, right? Everyone is anxious right now. Everyone, not just our federal employees. There's a trickle-down effect that attaches to all of the folks living in this area right now. And we've made national news in Maryland as being disproportionately affected by what's going on down the street, right? And so I very much view this as a time when what the public is expecting, since they are not going to get it from Washington, is they need to know that their local leaders and their state leaders are exercising prudence, caution, sound judgment, making sure they're digging deep into these issues to explore all the possibilities, because we have so many different things coming at us every day. And when I say us, I don't mean the council, I mean people, residents. The news cycle is astounding. And so, when we have that on the one hand, where that's an expectation that people are craving, that kind of responsibility and ethic in what public figures are doing because they're not able to get it from our federal system right now. When we have a county executive who, again, this wasn't about the pension shift. This is something our county executive has been seeking for a long time, waiting for Annapolis to please let me give you authority to tax more. This is not the year. And sending that message to the public from our executive leadership of, well, first it's a property tax, then it's an income tax. And oh, by the way, I know all of you are stressing about your personal financial situations right now, but I'm just going to keep swapping things in and out in an effort to try to increase our revenue, when really what the public is trying to get us to do is rein it in. And the governor's been sending that message since he took office. And it has not been a message that had been repeated here very often, although it comes up every year as we have our discussions about budget. And I've raised it every year. But we are in a make or break moment where we have got to do that difficult work. There is no alternative. And that is what the public is expecting us to do. And finally, in terms of the data, and I certainly appreciate the sentiment that you said we can go back into some, run ideas, take requests for different types of analyses that we could do. We do need to do that. We absolutely should be doing that. And I said this, I believe I said it to Council President Stewart last week. We should be treating this like the pandemic. It's a fiscal pandemic, right? It's not a public health issue. But we need to keep coming back to this time and time again, willing to take a deep dive and explore the possibilities and the ways we can manage and make the best of an incredibly challenging situation on a regular basis. And, I certainly will commit to sitting in on go sessions whenever I can, whenever the schedule permits. But also, I think we need to have more regular sessions that are of the full council diving into these, aside from what we would have normally done with our regular fiscal updates as a body. So with that, I yield back.
Thank you. Councilmember Katz.
Thank you, Madam President. And much of what I'm going to say, I did say at the Government Operations Committee meeting a couple days ago. It seems like a much longer ago than right now. But I am in agreement with my colleagues who are saying they have great problems with the proposal to increase. And I say this very publicly. Mr. Smith and Mr. Howard, Ms. Feldman, and others are truly gurus on this issue. But the guru business is a tough job, and we don't know what's going to happen. The word volatility has been mentioned many, many times, and it continues to be mentioned. And of course, the whole concern, I'll tell you, one of the most eye-opening items for me was about the 50 people or the whatever it is. I always like to think of it as 50 people pay about 50%, so I can remember the numbers. But and we'd all like to do more for the public. We'd all like to be able to help more people, but we need to have revenue in order to do that. And candidly, by raising the rate does not mean we're going to have more. We could easily have less. We have heard that that any of the 50, in many cases, have houses in more than one place. They have one in Montgomery County, which is their home, and then they have one in Delaware, Florida, or wherever else. And if they decide, I believe the number was 183 days, to declare that other home their domicile, then we're going to lose it all. We're going to lose every dime from their income tax. Truly a problem. And I've struggled with this. I mean, it's really a true problem for all of us. And I was reminded of that nursery rhyme that says, for the want of a nail, a shoe was lost. Of course, it's talking about horseshoes. I had to look that up. But it talks about how an insignificant act can have a grave and unseen consequences. This is not an insignificant act, and it could easily have grave consequences for all of us. You talked about, and I appreciate you getting the information about the unemployment, that in some cases, we're not even going to know that somebody who's living here is unemployed because they're getting their unemployment someplace else. They're getting it from the district, they're getting it from Virginia, wherever. But they're still our public, and they're still unemployed here. And let me say very clearly that the retroactive idea is just plain ridiculous, and it's unfair. And I certainly am not in favor of that at any degree. And just as an ending of this, I was, as everybody knows, I was in retail. Nobody ever said we need more revenue. Let's raise the price of that shirt. It didn't work that way, and it can't work that way. You might lower the price. You might come up with something else to try to help out, but you don't raise your prices. And I'm not going to suggest that. And I know that we're going to have a public hearing tomorrow, and or I guess tomorrow, and whatever day it is that we're going to have a public hearing, and we certainly should wait to hear what others have to say. But to quote my friend, Councilmember Fanny Gonzalez, though she certainly said it with more passion, you know where my vote will be. Thank you very much, Madam President.
Thank you. Councilmember Mink.
Thank you. We have some very difficult choices in front of us, and my feeling is that we have a responsibility to do our very, very best to put residents in the driver's seat of this decision. Obviously, a week is not enough time to do the kind of outreach that we'd like to do. And, by the time the public hearing comes around, we're going to have we're functionally, like, a lot of decisions are going to have to be made. And if we were to change our decision at that time, it would throw us into a loop. So it puts us in a very difficult position. That said, again, our responsibility, my belief is that our responsibility is to do the very, very best we can to do as much outreach and hear from as many people as possible within this very limited time frame. So as such, I know that I am not the only one who has been making a lot of calls over this weekend to try to have this tough conversation. And my approach has been to try to lay out the facts and the numbers as best we have them, and to hear from the folks I'm talking to about what they would like us to do. And I will give an example of a PTA meeting that I was at on Friday evening. We asked folks in the room to raise their hand if they were being impacted by the cuts at the federal level, or if they anticipated being impacted by those cuts sometime soon. And almost everyone in the room raised their hands. Almost everyone at this East County School PTA meeting. They had brought me there to lobby for funding lines in the MCPS budget and to talk about how those funding lines are going to very directly impact their schools, their children's school experience. And, so we had to kind of backtrack and talk about the numbers that we're talking about here a little bit more broadly, and what it means to have to consider, in order to fund those lines, some of which are in what MCPS has termed their discretionary, the discretionary section of their budget, that would require not only an income tax increase, but a retroactive income tax increase. And like I said to them, you're taking it on the chin right now, and it's not up to me I would love to fund the entire MCPS school budget as well as other things. But I'm the one who's going to have to take a vote, but what is right for your family? I would really like to hear from you all what you would like us to do. Here's the tax, the 1/10%. Think about, what does this mean for your finances? What does this mean on the ground in terms of your schools, et cetera? What do you think that we should do? What would you do? What would you have me do? And the room said, we will chip in a little more. There was agreement. And I found that very moving, again, because almost every hand was up in terms of being impacted by the federal increases. And there was still a consensus there. And it was, it was an emotional room, but that was the consensus. We have not gotten to have, and are not going to have time to have, very many of those conversations where we're able to present all of the information and say, what do you want us to do? Because we have just gotten a lot of this information ourselves. And so I know that we have all, ever since Mark County Executive Elridge's budget came over, we have all been getting emails that say no taxes, understandably. We have also been getting emails that say, fund the schools, fund the DD supplement, fund the primary care coalition, fund the parks. We've been getting all of these. And the public is not going to have as much time as they should have to be able to truly understand that we can't do both of those things. We cannot do both of those things. And so what would you have us do? That's the question that folks really deserve the time to think about and to weigh in on. And we have now a week or less, depending, functionally to get that figured out. So here's what I would ask is that colleagues, all of us, wait to really dig into a position until we can hear from as many people as possible. Keep making all of those calls, because some of these responses are certainly surprising me, and folks should have an opportunity to say what they think with some clarity in front of them. And what we now know is that if we do not do the income tax rate increase at all, we will have to cut an additional $35.5 million from the CE's original proposal. That's after committees have already trimmed $6 million, and most likely everything on the reconciliation list, the additions that committees recommended, would entirely be cut. If we do the full rate increase, but don't make it effective until 2026 with no retroactivity, we would again have to cut the entire reconciliation list, as well as including the $6 million that committees trimmed, as well as an additional $10 million from the original budget. Funding any of the additions on the reconciliation list with either of those two options, funding anything on the reconciliation list using either of those two options, would require us making significant additional cuts to the CE's original budget, again, beyond those that were recommended by the committees. So cutting items that committees have currently recommended funding, as well as cutting the entire reconciliation list, which includes millions of dollars to cover parks employee compensation increases and critical operating expenses. It includes more than $2 million for aging and disability, 1% rate increase for DD providers. It includes $4 million for important HOC projects. It includes $4 million for additional medical transport units for fire and rescue services. It includes it's the county executive on the line. The residents, that's right, please call everybody, keep it coming. That's right. We should have a radio show. And it also includes $18 million to fully fund the MCPS budget as requested, and that $18 million goes beyond what is discretionary. So that means cutting into the non-discretionary portion of the MCPS budget as well. So, and more, and a lot more. So again, while I completely understand and relate to the instinct to say residents are taking it too much on the chin already in Montgomery County, we cannot ask them to chip in more, especially with any of it applied retroactively. Also my gut instinct, I will say, when you look at the numbers and when you see the depth of the cuts that it would require, I think we have to put aside the emotional reaction for as long as possible and looking at, let me not say that because I know that everybody's going beyond the emotional reaction here. I know everybody's doing their due diligence here. But we just have this very limited amount of time to try to convey what we are weighing here and to hear back from folks. And I have had many meetings, phone meetings, over the course of this weekend, as well as some in person. And I am hearing repeatedly from a variety of nonprofits, from primary care coalition members, as well as from everyday residents through PTAs and neighborhood conversations. I am hearing, including from people being impacted by the federal cuts, wow, when you look at the depth of the cuts you're going to have to make, I will chip in a little bit more, and I'm scared. I'm nervous about the cuts that are going to be required if you don't do that. So I'm going to continue my outreach. I know that we all will. I think it's important to bring the community into this conversation as much as possible, and it's going to have to be before that hearing next week. I think we all know that that's going to be too late. Thank you.
Lorianne, did you want? Councilmember Joando, Council Vice President Joando.
Thank you. I really appreciate hearing from all of my colleagues. There's something I wanted to bring up that I didn't, but I will do it now. Really important context here, because we've talked a lot about the context and the instability and the volatility. We're all trying to do efforts around federal workers, and I'm really appreciative of that, that we care so much. You have to also take in the context of the tax bills that are moving their way through the Congress. We cannot talk, hasn't been mentioned yet. The pain of this administration in these illegal firings, in the harm, in the cuts that are going to be necessitated to Medicaid, to school meals, to all the many things that our residents benefit, have been kind of alluded to, the chaos. But what hasn't been mentioned is the financial impact of this to our residents and what it's going to mean at the same time. This is a time, we are in an ahistorical time. Like, I've never seen this confluence of events in this way. The bills that have made it through, and as of 3 days ago, that continue to make their way through the House and the Senate, that will pass, will give millionaires in Montgomery County and across the country a tax cut of $36,000 in tax year 2026. $36,000. The only question is it higher or a little bit lower? The bills are on track for that, and I'll send all my colleagues the data to so they can see where it's going. The increase for millionaires here, for the 0.1% change that we're talking about, to backfill some of these horrible cuts, because where's that $36,000 coming from? They're going to cut Medicaid, they're going to cut school meals, they're going to cut things that our residents need right now. The increase that we're discussing pales in comparison. For a millionaire would be $2,200. based on the chart, $2,216. That same millionaire would get a $36,000 tax cut. That's a net of $34,000. The same 50 people that Councilmember Katz is talking about are going to net money. We just have to talk about that. And they're getting, not only are they going to get it, it's whether it's fair or not, it's unfair in my view, probably fair in everyone's view. They're getting the money from cutting services our residents need. So why would we then put ourselves in the situation to say, well, let's further cut the services residents need to be fiscally prudent when they're being the most fiscally not prudent as possible, and those we still need the services. So I just think we have to take that into effect. And that's not something we've had to look at in this way. When you look at the modest increases here to the families that Councilmember Mink was talking about, to the teacher who makes $100,000 who's said to me, and I've seen this, I'll pay $100 more next year to hire those 600 special educators that we need so my job can be better. Like, I think, and when we're worried about the context, the income tax is always volatile. It just always is. And we're going into uncharted waters for sure. But I just think we have to understand that the money, what's happening at the federal level is horrible, and that unfortunately there will be massive tax changes in year 26 that are going to disproportionately benefit the wealthiest Americans, and on the backs of the cuts to services that our community relies on. So I just think we have to remember that. The last thing I'll just say real quick, Fairfax County is looking at increasing both their property tax and their meals tax to fund their deficit and fund their schools. We often hear that, you know, they're better than us. I don't think so. I love them, but I think we're pretty great. We're not the only ones that are in these tough situations. And the state did this. They made a tough choice and gave us this authority because they realized that we were in a tough situation. So thank you, Madam President.
Thank you very much. Thank you to my colleagues for that robust conversation that we will obviously continue over the next week. The only thing I wanted to add, and thank you all, is as we are thinking about the numbers, the volatility, is to also keep in mind our reserve levels and what we do need in reserves. I think just want to underscore whether or not you voiced an opinion for or against an income tax increase, whether or not it's the 3.3 retroactive or looking at a non-retroactive increase. We need to really listen to what Finance said and what Mr. Smith said about when we are going to get more information about the impacts we're seeing. And that is in a few months. And as Councilmember Alvarado said, there are things we can do and have in place to react to more bad news that's coming. And having reserves that are robust is one of the ways that we can ensure that we have that safety net so that mid-year, if we are facing savings plans, if we are working with our nonprofits who are being cut more or something else, that is the place where we can take a look at where we are now and what the need is. If we do not have healthy reserves, that is going to tie our hands even more to hamper us in reacting to what is taking place and what is happening to our residents. So that piece of it, I think, is the only piece that wasn't mentioned as we went through this morning. And I did want to just interject that into it. But this took a little longer than I thought this morning. But that's good because I think it was very important information for us to dig down as we're going through the different budgets. So I want to very much thank Finance, thank Mr. Smith. I want to move on to just kind of quickly review the Working Families Income Supplement. So I have Ms. Gosalia. Thank you, Ms. Gosalia. No, you didn't because I Ms. Gosalia, to kind of review this because this was something to kind of think about some of what Mr. Smith said as we're going through this.
So for the Working Families Income Supplement, on May 1st, the Government Operations and Fiscal Policy Committee convened and unanimously approved an increase to the Working Families Income Supplement NDA. That was in the amount of $3,179,321 for actual state billing. However, on April 24th, 2025, the county executive transmitted amendments to the FY26 operating budget, which recommended increasing the county's match of the state's EITC from 56% to 65%, a proposal that would add $5,031,000 to the FY26 cost for an earned income tax credit adjustment. The GO committee deferred this item for discussion at full council, which is why we are here today. For some background on the Working Families Income Supplement NDA, the Working Families Income Supplement provides funds to supplement the state's refundable earned income tax credit and is intended to benefit low-income working families in the county. The federal government authorizes the federal EITC for working people with low to moderate income. Eligibility to qualify for the county WFIS is based on the ability to qualify for the federal EITC, and for reference, in tax year 2024, the maximum adjusted gross income that a filer had in order to be eligible for the federal EITC was $18,591. This was for a single individual with no children. Several states, including Maryland, provide state tax credits to residents who receive the federal EITC. Maryland also provides refunds to eligible residents if their EITC exceeds their state tax liability. The state administers the county refund, so the county provides funding to the state for any county-related refunds and related administrative expenses. In FY22, the county increased the WFIS appropriation to account for changes made by the state during the 2021 General Assembly. Those changes included expanding the eligibility of the program through SB 218, which provided the refund to taxpayers that file with an individual taxpayer identification number, or an ITIN. The council amended county law, however, in 2021 to ensure that all residents would receive the benefit of the state's expansion of this program, and county law currently outlines a 100% match of the state EITC refund. It also allows for the county council to establish a different amount as part of the annual appropriation. Montgomery County is one of the few local jurisdictions in the county that offers a supplement to the state EITC, and for reference, the current county's WFIS is a 56% match of the state EITC for eligible county residents, and it has been at this level since FY24. The state match is currently 50% of the EITC, or 45% if the resident receives a refund, and the total combined county and state match is about 78% of the federal EITC. The increased funds are an adjustment to the amount the county matches of the state refundable EITC, and the adjustment increases the tax credit for qualified families and provides additional progressivity to the county tax structure. Table 3 within your packet also details the funding history for the Working Families Income Supplement, with the county executive's original recommended match of 56%. The average EITC for an eligible filer that they would receive is $567.42. And then with the proposed April 24th amendment to increase the match to 65%, the average EITC would then be $658.88, with the resulting delta of $91, with the resulting increase then being $91.46 per recipient on average. Just as a consideration, the council could also choose to set the county match for the WFIS at a different percentage than recommended by the county executive, and for each 1% change, whether up or down, for the match, that would be an equivalent of $559,000. Thank you.
Great. Thank you very much for that presentation. I'm not seeing any questions at this time. We really appreciate the work you've done and to have this as we're continuing our discussion on the budgets moving forward. So thank you very much. And now we will move on to the Maryland National Park and Planning Commission. And I know we have folks waiting here. I just very much appreciate folks from our Planning and Parks Department for waiting and listening through that conversation on our income tax. And I will turn it over to the chair of PHP to give an overview.
Thank you, Madam President. Thank you to Chair Harris and Director Sartori, Director Figueredo, and the Central Administrative Services for joining us and for patiently waiting this morning. Just want to remind colleagues of the unique nature of the MNC PPC budget. It is an outside bi-county agency, as we know, but it is critically important to quality of life of our residents. We have come back every year. It's chronically underfunded, particularly within the Parks Department in county executive recommended budgets. In years past, the council has historically restored as much of the critical services as we can, services and amenities our residents have relied on and have particularly demonstrated their value and their importance to mental health, to camps, to community events, to family gatherings, to all of the efforts that we are undertaking in the county. This year was no different. In fact, this year might have been one of the more challenging budgets that was proposed with respect to the Park and Planning Commission. The county executive recommended funding significantly below the commission's request, leaving many even non-discretionary items unfunded, including compensation. 5.675.521, the Park Fund budget request was not covered by the executive's budget, so over 5.6 million. 3.171 million of that was comprised of non-discretionary funds, as we talked about in committee: compensation increases, utility increases, contractual obligations, inflationary increases, debt service, things that the commission does not have a choice whether or not to fund, not new programs, not enhancements or expansions of programs, but effectively keeping the lights on where there are lights, although many of our parks are closed after dusk. The PHP committee reviewed the recommended budget on April 23rd. On April 24th, the CE sent over budget amendments that included 1.07, just under 1.073 million for the compensation increases, noting that that was a mistake, that was not included, but did not include nearly 2.1 million in non-discretionary funds that still remain unfunded. And even in the recommended budget amendments, we still have to take those up. The committee's recommended these funds be restored to the base budget. You can see in the chart in your packet. And then we looked separately at restorations of requests that we thought were particularly important, but are admittedly and notably enhancements. We really parsed through and reached a consensus on the committee, which I very much appreciated colleagues for working together and navigating through. We tried to ensure that everybody got most of what they hoped were the biggest priorities, but we were very judicious in what we chose to actually put forward, hoping that we could fight very hard to include these in the final budget. We predominantly focused on items that are public-facing, park refreshes that really demonstrate significant value and benefit for limited dollars, positioned to leverage the vast amount of volunteer cleanup hours contributed by residents and community groups so that we can ensure that we are continuing to leverage those help, and then support for our older adult population, which is a real area of need. We also went through the administration fund. There was $2,143,604 not covered in the executive's budget. We'll have Ms. Dunn walk us through the differences between the agency request, the county executive's recommendation, and the non-recommended cuts put forward by the departments to close the gap. Before she does it, I did just want to remind the body of the bi-county nature of the Central Administrative Services piece of this budget. We will approve the Parks Department and the Planning Department. That is entirely within our discretion, but for the Central Administrative Services, that's a shared obligation of Montgomery County and Prince George's County, and so we will have to reconcile and come to agreement at our meeting on Thursday. This will be to serve as a signal of where the council is, to allow for our council president and staff to work together to negotiate that and come back to us with a final resolution. Then we also spent a considerable amount of time discussing the great work of our state delegation, who secured quite a bit of critical state funding for a number of our priorities during the legislative session, particularly on the capital side, which helped to alleviate some of the dynamics, but not all of the dynamics that we face with some of the delays and reductions, particularly related to Wheaton Regional Park, among others. So I wanted to note the work of Senator Zucker and our delegation on their work on the capital budget. Very challenging operating budget, but we got a lot of success in the capital budget, and Parks was a significant beneficiary of that. So with that, let me see if colleagues, Vice President Jawando or Councilmember Fani Gonzalez have anything to add that I've missed, and would turn it back to you to turn it to Chair Harris to see if he has any comments, and to council staff.
Great. And just to clarify for council, we will be taking a hand vote on those, central administrative services that are the bi-county ones that we need to have the meeting on Thursday. But all other things, since there are additions on our reconciliation list, we will not be voting on those today. And if colleagues wanted to add anything for this budget, either to the reduction side of the reconciliation list or the additional side, since this is outside of the committee recommendations, that would require someone to move it, second it, and then a majority of the council to add to the reconciliation, just to clarify our process. Chair Harris, if you'd like to speak.
No, I'll be brief. We're delighted to be here with you today, and we are so grateful for your support. You know, as we've always mentioned, that the county exec definitely undercuts our budget every year, and so we're really delighted and really thankful for how you're fighting for us. As I mentioned when I spoke with all of you last summer when we were about to prepare our budget, we knew it was going to be a very tough budget year, and so we went in and really sharpened our pencils at that time. And so we were very surprised that we have to sharpen again, but we know it's a tough budget year, and we're willing to work with you to keep up our park system and our planning system. Thank you so much.
Thank you so much. Ms. Dunn, I'll turn it over to you, and let's deal with the central administrative services first, do the hand vote on that, and then move on to the other budget items.
Great, thank you, Council President. And that's exactly how the staff report has been organized today. We wanted to get the central administrative services out of the way because it is something that you won't come back and revisit once you take that hand vote. You'll see that that starts on the first page of the staff report. For FY26, the Montgomery County portion of the CAS budget is approximately $13.6 million, and they asked for an increase of about $700,000. The CEU's recommended budget, the CAS reduction would be almost $400,000. In committee, there was discussion, and also just for council members to understand, when the commission receives what the county executive has recommended, the commission comes together, they meet, they go to the board, and the board sends over to the council a letter that says, okay, here are reductions we would take to meet that CE level of funding. They almost always find savings in each of the different departments. They find savings in CAS, in the Parks Department, in the Planning Department, and in the Commissioner's Office. So that's great. We take those savings. That's basically an issue related to the fact that they're creating these budgets in the fall. And so by the time we get to April and May, they have a much better idea of the hiring that can occur by the end of the year, places where they have some extra funding, and they can pre-fund some things that they need for the next fiscal year. So that's when we say savings, that's kind of where it comes from. It's really about a logistical thing when the budget gets prepared versus when they come to you. That all said, to cover the CAS portion of what the executive's budget would not fund, they brought forward again some savings, and then they have they're itemized, they're called non-recommended reductions. They bring them in two tiers. And so where the committee landed was to restore $65,358 to the administration fund for CAS. And what this would do, it would prevent the delay in hiring of 3 positions. It was part of the way they were going to meet that savings. And the CAS staff spoke very well about the need for the finance payroll manager and the senior auditor to continue to get the work done that needs done at CAS. They are also in the process of hiring an executive director permanently, but they're in an elaborate process for that.
and they do anticipate that could take up to 6 months. So that wasn't one of the offered savings that the committee felt they needed to retain. And again, as the chair of the PHP committee has mentioned, you will take this hand vote today because you will be talking to the Prince George's County Council and coming to agreement on what level of funding CAS will receive. Because anything that's decided here has an implication for Prince George's County and vice versa, because the two counties fund together their budget. If you have any questions on that.
Does anyone have any questions on that? Because then we'll do a hand vote on the recommendation from the PHP committee for the Central Administrative Services. All right, not seeing. All those in favor of the recommendation from the PHP committee, please raise your hand. And that is unanimous. All right, Ms. Dunn, you can continue with the rest of the packet.
Great, thank you. We're going to now move to the Commissioner's Office and what's the non-departmental account that is under the administration fund. The Commissioner's Office, as you know, consists of one full-time chair and 4 commissioners who meet weekly. Their requested budget for FY26 was approximately $1.4 million. This was an increase of about $166,000 from their FY25 approved budget, and mainly in the form of personnel services. Again, the committee had a discussion. The Commissioner's Office share of a reduction to take to meet the CE budget was around $98,000, which really was the amount of funding requested to convert a part-time position to a full-time administrative assistant 3 position, and the committee at this time supported deferring the hiring of that position and to take that savings. The piece of the non-departmental is important to note here because this was a $315,000 reduction that they could take to meet the CE budget, but it really is in the form of compensation and compensation increases that are similar to what we'll be talking about for the Parks Department soon. And so the committee felt strongly that those should be restored as they do support the base budget mission of the Planning Department through its administrative fund. And I'll pause there. Is there any questions?
Councilmember Sales, did you have a question? Yeah.
Did we skip something? The reduction from the Commissioner's Office?
I mentioned it being that the committee supported taking the reduction for the administrative 3 position, yes.
Okay, so we're voting on both of those, the compensation increase and the reduction?
From what I think is you are asking questions on it, but I don't think that the council's taking straw votes on this piece. From here on out, it's just about discussion because everything here will go on the reconciliation list.
Okay, thank you.
All right, so this piece of it we don't have to vote on for Thursday. Okay.
Correct.
Correct. So any other clarifications for this piece? Not seeing any, you can continue.
Great, thank you. With that, we'll move to the Planning Department. The Planning Department's FY26 operating budget request was approximately $28 million, which is about a $1.5 million increase over the FY25 adopted budget. And these came in a few different categories. One that we think of as base budget items, they include salary and benefit increases, inflationary and chargeback adjustments, and other major known commitments. They totaled just over $600,000. They had 1 new time funding initiatives that would support 4 studies totaling just over $600,000. And this would replace current FY25 one-time funding of just over $418,000 for a net increase of $200,000. And the board is also requesting new ongoing funding of around $415,000, which includes 3 new positions to the Planning Department. One of these changes was to approve ongoing funding of $16,000 for the Planning Academy. We're calling this one out because last year, if you recall, the council approved $199,700 for the Planning Academy, and it was planning's intention at that time to clarify that a portion of that, the $16,000, would be an ongoing need so that every year they could continue working on and providing the Planning Academy for the residents of the county. And so we're just noting that this is an ongoing portion of that. It was included in the accounting that came over, so this isn't an additional amount we're asking, but we're just clarifying that the council's on board with an ongoing funding amount of $16,000 for this. No questions? There was also the committee approved an additional increase to ongoing contracts. This was a $46,700 increase for placemaking efforts and a $20,000 increase to support historic designations that the committee supported. In addition, the committee supports ongoing funding of $200,617 for master plan support. And what we'll note here is that current master plan funding has been characterized as one-time funding and allocated per plan when the work program is approved at the annual budget. But this new approach would change the master plan funding to an ongoing expense not broken down by master plan, which provides flexibility to the department to address professional service needs across master plans as they're being developed. Okay. And the next is to place almost $28,000 on the reconciliation list, and this would restore funding that had been proposed for reduction to the Housing Needs Assessment and Preference Study of $50,000, and a slight increase in delayed hiring for a new placemaker coordinator position that they requested. If there's any questions there.
No, but I'd like to just stop, since this is an item on the reconciliation list, if the chair or director wanted to speak to it for a moment to give you a chance. So.
Sure, thank you. So the funding for the housing, for the record, Jason Sartori, Planning Director. The funding for the Housing Needs Assessment and Preferences Study, what we've requested was $200,000. We believe that we can do a portion of that, the Housing Needs Assessment, which gives us a sense of how what our needs are for housing for people at different stages of life, for different types of housing, for housing at different price points, and in how that compares to what our supply is. We believe we could do a good portion of that in-house. It's just going to take us a lot longer. The part that we can't do in-house is the preferences survey, which is a countywide statistically significant survey to get a good understanding of people's desires from a housing perspective. I believe that the committee was interested in trying to supplement that effort in restoring some of that funding so that we didn't have to take a delay, because it is really important for us to be able to do this housing work and have a good understanding of our housing needs as soon as we possibly can. The other thing, I'm kind of in a weird position to be advocating almost against something that's on the reconciliation list here, in that to offset that additional cost of $50,000 on the reconciliation list, my understanding was that the committee recommended an additional 2-month delay in hiring the one position that the committee recommended we receive, which is a placemaking position. And so, ideal world, we wouldn't delay that more than the 4 months that we've already included, but this on the reconciliation list is an additional 2-month delay that would bring it to a 6-month delay. Just would underscore again the huge importance for the department in being able to restore some of the staffing that we have in. And I listened to everything that you guys talked about in this last session, and I completely understand the difficult situation that you all are in, and appreciate that. I just part of the last time we went through a reduction in force with the Great Recession. We are still today at 84% of our staffing levels of that pre-recession, whereas county government is at about 112% of that pre-recession staffing levels. And this is just what we've been dealing with. And so we are trying, we have a lot more that we need to do. So any opportunity that we can to try to get more staff to be able to fulfill the services that we're expected to fulfill for the county, we certainly appreciate the council's consideration of those. Thank you.
Thank you, Director Story. And not seeing any other questions or comments, we can continue, Ms. Dunn.
Great, thank you. With that, we're going to move to the Park Fund. The Parks Department has requested FY26 tax-supported funding of around $142 million. This excludes grants, debt service, and reserves. And it represents a $9.9 million or 7.5% increase over their FY25 approved budget. As already had been noted this morning, the executive recommends a 3.2% increase over the FY25 budget for parks. The first recommendation from the committee was to restore the just over $1 million compensation increases amount that had not been covered. And as you also heard, on April 24th, the county executive did send an amendment that would request adding that funding back in. So it'll be treated as an amendment, but it is the first recommendation by the committee and then supported by the CE. The second is to restore just over $2 million to the Park Fund, which would support FY26 base budget needs, such as contractual inflationary increases, utility cost increases, and other operating budget impacts of our CIP improvements. Those are things that the council has already signaled their commitment to, and they need staffing and they need a certain amount of operating budget to make them successful. The third piece here will be to restore funding for our fire alarm inspections under contractual increases. This is for $10,000. This was discussed by the Joint Committee just before the PHP had its work session last week. And the committee, Joint Committee recommended that $10,000 get, again, also put back in. It was under a contractual increases that was decreased from the recommendation by Parks to meet their CE budget, which was difficult. Is there any questions there? The next one at the top of the next page is to place 2 new positions on the reconciliation list. This was the Parks Department's first tier of things to restore all base budget items. Again, we just covered that. It equaled almost $3 million. The second tier they had really were the new enhancements, the program changes that would really benefit improvements to the park departments that they've been working on. And they placed the committee has recommended placing 2 new positions on the reconciliation list. One is a Parks Cleanup Program Assistant for $84,000. The second is a Nature and Outdoor Programming for 55 plus community position for just over $123,000. The next item also placed on the reconciliation list recommended by the committee is to fund park facelifts on the reconciliation list in 2 tranches of $100,000 each. The director can speak to this, but the facelifts really are a way to do very quick, easy fixes to parks that make them more inviting to the public. They aren't renovations, they aren't huge changes, but they are quick things that the Parks Department can do that they don't have another funding source to provide these things with. And I can turn it to her.
Sorry, yeah, go ahead. Thank you so much, Mitty Figueredo, Parks Director. Yeah, and I was very grateful to the committee for them to add these 2 positions and then this additional source of funding for us to the reconciliation list. The 2 positions, one of them, and the committee chair kind of addressed this, is for the Parks Cleanup Assistant. This is a position that we funded last year for the first time with a Parks Foundation grant, and we did this as a pilot because we wanted to see how many more cleanups we could do in our parks with 1 additional position to supplement what we already have, which is 1 person. And with this position, we were able to increase the number of cleanups in parks by 50%. I will add that the position is focused on doing cleanups in equity areas where sometimes we might not get as many complaints, but we know these places also need quite a bit of attention. So we felt that with this pilot for a year, we were really able to demonstrate a big impact. And so we were grateful to see that that was added to the reconciliation list. And then also the other position was for someone to add programming in our nature centers for our 55 and over community. We know that there is a big demand for programs for seniors, also teens, but seniors, you all know that's a growing segment of our population, and we want to get them outside in nature, interacting with each other and getting some fresh air and exercise, and so we'll be able to do much more of that with this position if in fact it's funded off the reconciliation list. And then the Parks Faceless program, that's another one where we found some year-end money last year to do this program. I think it was about $100,000, and with that little bit of money, we were able to replace over 30 signs. We did small faceless projects in over 10 parks. The way that we operate is we have a maintenance schedule. We mow grass, we pick up trash, and then we renovate parks and we refresh parks. And sometimes some of those things in between might fall through the cracks. And this additional source of funding allows us to direct some resources to some of these smaller items that have a big impact on the community and help the community realize that their park is loved and that we are paying attention to it for them. So thank you. Thank you very much for that. Councilmember Mink has a question.
I just wanted to go back to the Tier 1 components briefly. As you just heard in our previous conversation, we've got a really tough decision ahead of us, and the only option that wouldn't have us cutting everything on the reconciliation list, which of course includes these 3 tier 1 items, as well as additional cuts that were already had been previously recommended for approval by committees. The only option that allows for that to not happen is if we do a retroactive tax increase, which there's a lot of discomfort with, understandably. It's a difficult question to wrestle with, but given that that's what's in front of us and that we have, let's just look at these the 2 larger ticket items, the 1 million for the FY26 compensation increases and the 2 million supporting the base budget needs. If we look at a situation in which we have to make cuts that could impact those, can you talk about how that would impact on your end, or how you're kind of thinking about that possibility?
Well, we were very grateful that the county executive sent over an amendment for the $1 million for compensation, noting that it, I guess, had been a mistake not to include that in our budget. Obviously, if we can't, if we don't have the additional funding for the expected compensation increases, then we can't fund them. And then as far as the other 2 million that was left to get us to a same services budget, which was already after we had found, as council staff pointed out, $1.5 million worth of savings, things that we could prepay this year, and that brought that gap to about $2 million to get us the same services. That's things like operating budget impacts, which really just means positions for our new and renovated parks. If we don't have OBI for our parks, that means we can't cut the grass and we can't keep them clean. And people will immediately see that these new parks are not being taken care of. Our utility increases, if we can't cover lights and water, then that means that there are fields that we cannot turn the lights on at night. People pay to rent our fields, particularly game fields, for night play, but their permit fees don't cover the cost of lighting the fields. So we would have to stop doing quite a bit of that, and irrigating our fields. We invest a lot in our natural grass fields, and they require a lot of care, and among the care that they require is irrigation, and we would have to stop irrigating some of those fields because we wouldn't be able to pay our water bills. Our capital equipment debt service, if we can't pay the debt service on our capital equipment, we can't keep buying capital equipment because we're not meeting our obligations there. Contractual increases, those are things that are in our contracts to reflect increasing costs to the people we contract with to provide services. So we would have to cut back. And a big example, and the one that we always, want to use because it's something that's very real to people and that they feel and that they have strong feelings about, and that's bathrooms. If we can't cover those contractual increases, I believe we calculated we'd be removing something like 10 toilets from parks, for example. And then inflationary increases, those are our costs. That's just the cost of things going up in price. So that there are things like fertilizer for our fields, seeds, replacement equipment for playgrounds. We can't buy as many of those things, so we can't maintain what we have. And these are, we believe, real impacts that county residents would begin to feel.
Thank you. Appreciate that. And again, we have heard from a lot of residents that they want us to restore this funding, but also we have tough decisions to make. And so I think important for us as we keep in mind that we, nobody enjoys increasing taxes, but also if we do not do that, that is going to require cuts, across departments, and including looking at cuts that could impact, the ability to maintain services. And I see that it looks like our chair has.
Yes, I just want to, thank you for your question. But I just want to say, the Parks Department started in such a big hole, like a huge hole. So these are the normal things that parks would have to do just to meet normal services. So when you start in a huge hole, it is, the county's Middy's group only got a 3.2% increase, right? If you look at some of the other agencies, we didn't get enough to maintain services. And so I know it's a large amount, but we started in such a big hole. So I hope that the council can look at that as you're making their decisions. Thank you.
And can you tell us again, what was the percent of staffing relative to pre-recession that you're at now again?
In the planning department, we are at 84% compared to FY 2009.
Thank you. Yeah, important point. So if we were to go ahead and fund those restorations in order for you to maintain same services and have us moving in the right direction and not the wrong direction, that would mean if we're accepting a little over of $3 million of those increases just for the tier 1 off the reconciliation list, then that would then have us going back into other pieces that committees have recommended that we fund and cutting $3 million plus from there. So just to make sure we're laying that out. Thank you.
Councilmember Malcolm.
Thank you. So I think the major agreement that we all have is that it's going to be tough to do this. But I just wanted to highlight the difference between the parks budget and pretty much all the other departments that we've looked at. The 1 million was a mistake. That, in my opinion, shouldn't even be on the rec list. We all approved unanimously the compensation, and so this was a mistake. It should never have, it shouldn't have been on, in my opinion, on the rec list. The other piece is the same service budget, which Chair Harris mentioned. We haven't seen this level of cut anywhere else in the budget. And so I just wanted to lift that up. Thank you.
Councilmember Friedson, did you want? Yeah.
Thank you, Councilmember Balkin, for noting that. That is very much how the committee took this up. We very much separated out what we saw as the $3.1 million, which was a combination of the compensation, which we knew the county executive he had signaled that he was moving forward with an amendment. We hadn't received it yet. We ended up receiving it on the next day. And the same services, non-discretionary decisions that are just maintenance level to literally cut the grass in the new park that we had already made a decision to open. You know, the implementation of previous decisions that we have already made. Inflationary increases just to keep the same things in our parks going moving forward. We then added on a few and we winnowed it down dramatically, some enhancements. That's different. Those are very much discretionary. Those are very similar to the other budget decisions that are being made in other departments. We viewed those quite differently and we took them up as such in committee. So I appreciate you noting that. That was very much in the spirit of how we viewed it, as the non-discretionary items for a same services level to meet the contractual obligations, to meet the compensation agreements, and to maintain a same service level, and then enhancements and expansions that we think are really worthwhile and that would be front facing and very helpful, but are new or adds or additions and not necessarily same service level.
Councilmember Almanas.
Thank you. So I appreciate Councilmember Balcom's point. I agree. The 1 million should not be on the reconciliation list. That's pretty straightforward. And filling the 2 million hole from last year, this is a taste of what's to come in all departments. Reductions that are going to have to likely be made based on the volatility that we just had a conversation about, and the very strong likelihood that income tax receipts are actually going to go down because of the amount of people that are going to be losing their jobs. So it is, painful isn't the right word, it's reality. But I also just want to acknowledge that usage rates have also gone up among all parks facilities, and that's a good thing. And as we noted through the public testimony, once again, some of the most passionate advocates that came out and spoke on behalf of the services that they wanted to see supported was for our incredible park system and recreation too. But I just wanted to note both of those things.
Councilman Germano.
Yeah, I appreciate that. I agree on the 1 million, which we got, which you have to fund your contracts. I will say that there are many things on this list, even outside of parks, that are same service related, to the point that was made, not just in parks. I mean, in in this list specifically, but also in the larger reconciliation list, there are things that are same service related. And so I think that's something we're just going to have to grapple with, which is why our this conversation is so important. But we did have strong agreement that certainly the contracts have to be honored. There is high utilization. I think if we heard about two things in the budget the most, it was probably parks. It always wins, you know, and then probably schools, you know, and so I just really want to emphasize that the revenue we have is going to really depend on whether we can maintain same services for highly utilized, highly needed entities like schools and parks. So, thank you.
Councilmember Fanny Gonzalez.
I wasn't going to say anything, but the thing that really bothered me about this report is, and it's been touched by everybody. We in committee, we did not say that this was tier 1. We say that this is same service level, and that's the confusion here. It should have not been posted this way because it's not true. Compensation increases is part of same service level. We're not, so that bothered me. And so when you're voting, remember that. And I will end by saying that Sligo Creek Festival was amazing. Thank you so much for your work. That's it.
Thank you. And I'll just also add thank you to your work. I know this has been really stressful time since the time that the county executive's budget came out for you all, for the staff at the parks, and really appreciate all the work that you're doing. And, you know, as we go through the budget, I think we are looking carefully at what we can do within the revenue sources we have. And as I said before, we need to look at those things that we know our community needs during times of great stress and upheaval. And the parks have been there before because they're free and you can go out and you can enjoy them. And so for me, you know, looking at what we can do, I mean, compensation, absolutely. And then what we can do to make sure that you are made whole in the same service, I think is really important as we're just looking at the times we're living in right now. So thank you very much for that. Ms. Dunn, I think we're done with the operating, and if you wanted to talk about some of the CIP amendments, or
of course.
did
All I
I
just
miss
want to
anything?
note for you are that as a body, you do look at the appropriations needed for other funds that are within the Park and Planning Department. So those are summarized for you on the 4th page of the staff report. There was a request to transfer $1.5 million from the administration fund to support the Development Review Special Revenue Fund to keep its fund balance up, and the committee supported that transfer. But these are part of the budget. They're part of the budget resolution, so I just wanted to call your attention. They're in the middle of page 4. If there aren't questions about that, we can turn to the amendments to the FY25 through 30 capital improvements program. And the first has to do with a revised affordability reconciliation PDF that came over that would decrease government obligation bond funding by $2 million for parks, $1.5 million in FY26, and $500,000 in FY29. This is on page 5 of the staff report, giving some background to it. The Planning Board looked at this and sent over their response on April 11th, requesting that the council reject this recommended revised affordability PDF. If in fact parks had to take the cut, they had put forward that the reduction would be taken in the Wheaton Regional Park PDF, and that would cut it by $1.5 million in FY26, again, and $500,000 in FY29. As many of you are aware, there was state aid that was awarded recently, and the state did award $3 million grant to Wheaton Regional Park Improvements Project. The aid is specifically earmarked to a Wheaton Active Sports Park as part of the Wheaton Regional Park. And according to the Parks Director, and she can also speak to this, the existing FY26 CIP funding for the park improvements project is really needed to help prepare and to get things in place to receive that grant money and to continue the whole overall improvements to the park. And so while the state funding grant is amazing and super helpful to the Parks Department, it's not a perfect replacement for the money that would be lost if they took the cut, the $1.5 million cut that the CE is recommending. And so the the committee supported, not taking the affordability reconciliation PDF as revised.
Councilmember Fanny Gonzalez.
Just want to make it clear, yes, the park is in Wheaton, but this is a regional park with people coming from across the area, even from Virginia, they come here. So that's one thing that I wanted to say. So don't see it as a Wheaton thing. 2, the General Assembly gave us $3 million because we told them that the county council has made a commitment and and we approved $2 million last year. They knew that. This is following up of a commitment that we told them we had. Imagine if they find out that we're taking $2 million back after they gave us $3 million, after all we did. It's so wrong. And again, I don't know what's wrong with the county executive. Honestly, he has this hate towards parking planning. It's awful. And this is another reflection of that, and it's so wrong. And just think about the impact of the General Assembly if we follow with this recommendation. Is not okay.
Yeah, and to elaborate on your remarks just now, Councilmember Fanny Gonzalez, the last CIP cycle, the council approved adding $6 million in GEO bond funds to the Wheaton Regional Park PDF to move forward with the implementation of the recommendations in the Wheaton Regional Park Master Plan. That $1.5 million in FY26, we were planning to spend that to begin some of the projects that we need to implement at the Rubini area, including parking lot, courts, things like that, that are preparatory to being able to implement the Wheaton Action Sports Park, for which we received $3 million. Even after the council's generous addition to our CIP for Wheaton Regional Park last year, we still have like a $5 to $6 million delta that was unfunded. So that $3 million was supposed to fill in that gap, not backfill for another cut. So just thank you, and wanted to elaborate on that. Thank you. Councilmember Friedson.
Well, first of all, as somebody who doesn't live in Wheaton but spends quite a bit of time in Wheaton Regional Park, I will testify to that, and also will note that "It's a Wheaton thing" should be on a T-shirt, and I will buy it. So just a little note there. It's a Wheaton thing, and I'm digging it. I just want to highlight the point that was made about the state funding, because I think this is really important. We run the risk of the state not being as interested in funding capital projects if they add funding based on our commitments, and then we renege on those commitments based on their funding. Imagine if the roles were reversed and we did capital grants that were matching state grants, and then the state saw that the following year and said, you know what, we're going to take out the $500,000 that the county council put in. We would no longer do state matching grants, because it would be not additive. It would be, our funding to offset their support, and we'd end up in the same place where we started, but with a sacrifice on our end that could have otherwise gone to fund other priorities. So it's not just about a Wheaton thing. It's not just about a regional park that's one of the most utilized and will be even more utilized with a new carousel that many of us were at. And with the Action Park is going to activate even more folks from a broader range of the region. It's a question of our partnership with the state and their willingness to invest in our capital projects, particularly our parks, but beyond that as well. If we start removing funding out of the capital budget to offset their support, it's not going to make them as enthusiastic in offering that support in the years moving forward. So I think we need to be very cautious with that as our rationale for budgetary decisions. Having said that, this will have to be dealt with in reconciliation in the CIP. We always have to make tough choices, but we shouldn't be doing this to offset the state adding funding that was supposed to offset the gap that our funding didn't fully fill. It's disingenuous at best for that to be the rationale.
Councilmember Sale.
Thank you. Just wanted to clarify that this funding isn't contingent on the state funding isn't contingent upon the $2 million.
The funding itself is not contingent. There isn't a provision in the capital grant that it be
Okay.
contingent.
Thank you.
However, without that 1.5 million in FY26, we can't actually spend the 3 million that we got for the Wheaton Action Sports Park, because the 1.5 million in FY26 gets us to other projects that we need to do in order to prepare for the Wheaton Action Sports Park.
Do you have a, can you summarize or give us a understanding of what those pre-projects are that total the 1.5?
So some of those projects include courts improved. So the Wheaton Action Sports Park is in kind of the Rubini complex, what we call the Rubini complex. It's an area in Wheaton Regional Park. And some of the projects to prepare for that include some sport court renovations that are in the area, improvements to the maintenance yard that will be serving the Action Sports Park, because we're going to have more maintenance needs for the Action Sports Park, some parking lot and driveway improvements that have to happen before we can move to construction on the sports park. We're also moving forward with some of the state Safe Streets for All funded projects that will allow us to create safer pathways into Wheaton Regional Park toward the Rubini complex. Those are all things that need to be done before we can move to construction of the Action Sports Park.
And how many parks do we have in our park system in the county?
415.
Okay, and do we have a schedule of all the parks and all of the capital improvements they've had over the last 5 years? I'm thinking of since the pandemic, how we've managed to include our 400 parks throughout the CIP.
Off the top of my head, I can't get you the list of every park we've had a project in, but I will tell you that at any given time, we have over 300 to 350 projects that our Park Development Division is moving through some phase of planning, design, or construction. Those parks are all over the county. We focus very much on moving forward projects that are in equity areas. We look at equity considerations with the equity focus areas and the community equity index that the planning department developed. We also look at parks condition, master plan recommendation, and all of those things help us formulate what our priority list is for which park projects we're moving forward with. And then, of course, that's also contingent on the funding that we receive in the CIP through different funding sources, primarily GO bonds, but also our own park bonds. We look to grants to try to supplement what we're getting from the county, and all of that kind of comes together in forming our sort of our park development priorities, if you will.
Okay. Just thinking about, I believe last cycle we approved $6 million in restoration to Wheaton Parks. And so just thinking about the new CIP that's about to restart, it would be helpful. I don't know how quickly you can provide that list of where investments have been made in the current CIP across our park system. It would be helpful as we reflect on the needs for this budget. It's no surprise in the limited funds that we do have and the gap that needs to be filled. So I just want to make sure we have as much information as possible going into these
Absolutely.
deliberations.
Yes, we're happy to share that information.
Thank you.
Councilmember Sales, it might be helpful. You could also look in the committee staff report where we covered this for the committee. I did include a table that provided at least all the places where there was significant government obligation bond funding for the Parks Department, just to illustrate how difficult it would be for any one of the places where they received GO bond funding to be reduced by 1.5 million. There are about 8 on that page. It is the ADA compliance, ball field initiatives, legacy open spaces only.
I'm sorry, what page are you on in the packet?
So it's it's page 24 of the staff report that's attached, the PHP committee staff report attached, is page 24. The big ones that have any significant funding where you could see a reduction are ball field initiatives, PLAR, which stands for
planned life cycle asset replacement. It's really about maintaining the safety and the use of the parks. The other is Trails hard surface renovations, already at 1.5 million. If you reduce it by its full budget in 26 or 25, that would be difficult. And then the last one is the Wheaton Regional Park improvement. So it's just it was to give the committee an idea of, they're being asked to address an affordability PDF that would take 1.5 million in GO bonds away. Where could that occur? What does this look like? And so providing the table what are the other options? And the other options aren't great either, right? They're either not sufficient funding, or they're the projects that really maintain the parks at the level of safety and usage that we expect.
Great. Ms. Dunn, is there anything else on the CIP?
Let's see. We have some more. Yes.
Okay.
As also the council received another amendment to the CIP, which was to revise the text for the Ballfield Initiatives PDF, which would insert language that would prohibit the use of funds to install or make improvements to artificial turf fields. Didn't come with a dollar amount attached to it. It was just to change the funding, but it would definitely have an impact, certainly for the Parks Ballfield Initiative PDF, but it could have an impact for other places in the county as well. And the committee was supportive of deferring any conversation of this at this time. This budget process has been difficult and hard enough. That amendment came approximately a week or two ago, so very recently, and it really just deserves a lot more time and attention to the impacts that it might produce, and so to not make the change at this time. Okay.
That's good.
The last recommendation related to the CIP, well, a couple things. Again, for the body, just to know that the appropriation needed to accept the state aid, so there will be attached PDFs for all the places to accept the state aid. There was also some additional revenue received from land sale proceeds related to Warner Circle, and all of that is on page 5 of the staff report. The amounts and to the project description forms, those would be attributed to, and the committee supported that. And the next is Parks is requesting to make some revisions to the program open space allocations. This is due to the state revising every year their program open space allocation to Montgomery County based on their budget concerns and challenges. This year, that amount has decreased, and so for Parks to address that, they needed to reallocate their program open space funding in such a way that they either reduced or shifted funding, and that's shown to you at the top of page 6. It was reviewed with the committee who supported Parks's allocation of that reduced program open space funding. And then lastly, Parks is requesting, there was a very small appropriation of $25,000 that they want to be able to place into the Dalewood Playgrounds PDF. There were some other minor text changes. Those are all attached in PDF form, but they're really just to get them out there for public view, but they're very minor. And so the committee, we recommend supporting that.
Great. Thank you. I'm not seeing any other questions or comments on this. Since these are amendments to the FY25 to 30 capital improvement programs, as we've been doing when we get into other amendments, a hand vote would be appropriate at this time, so staff can move forward on the reconciliation of that. All right, not seeing any questions. All those in favor of the committee's recommendation on the CIP amendments? And that is unanimous.
Great. Thank you. There is one last thing. We have a summary of key issues section, and with this again, because a part of what the body does when you approve the budget for the planning department is you're approving their work program. And there's two things. The planning department has recently reorganized their divisions, and so you will see when they produce this budget in the fall, they also provide to the council, and it's also in their budget resolution, how their money is distributed across those 10 divisions. At the bottom of page 6, you'll see what's currently came to the body to approve. But since the time of that budget preparation, they have the board has approved a reorganization. So they've had to readjust how that budgeting gets distributed amongst the divisions. And that redistribution, same amount of money, is at the top of page 7 of the staff report. This was also, again, reviewed by the committee to get their nod of approval, which they support. And then lastly is the Planning Department's work program. They are proposing 2 master plans to be coming forward in the next year at some point. The start, one is a Burtonsville Employment Area Minor Master Plan Amendment, and the second is a Kensington Sector Plan Amendment. And then, of course, the studies are also listed for you on page 7, and the committee unanimously supported the proposed work program.
Sure. That's it. Thank you. Thank you very much for being here as we continue to go through our budget process. I appreciate all that. Thank you, Ms. Dunn. Next, before we recess, we will take up the WSSC Water and the WSSC Water FY26 System Development Charge. As folks come up to the table, again, want to express my appreciation to everyone from WSSC who's been with us this morning, waiting for us to take up this item. Before we turn it over to staff, I'll turn it over to the chair of the Transportation and Environment Committee, Chair Glass.
Thank you very much, Madam President. Thank you to you and Councilmember Belcom on the T&E Committee. Thank you for WSSC's patience during a full council schedule and important discussion this morning. On April 24th, the T&E Committee voted 3-0 to support WSSC's proposed budget, which assumes a 9.8% increase in FY26. And important background as we engage in this conversation, last fall, the Montgomery County Council approved a spending control limit cap of 10.2%, and the Prince George's Council approved a 9% spending cap, and this proposal helps us meet in the middle. With that, I'll turn it back to you, Madam President.
Myself off. Mr. Lachenko, you want to walk through the packet?
Sure. And the packet itself is quite lengthy, so I have the cover sheet, which hits the highlights. And unlike the park and planning budget, we don't have reconciliation list issues with regard to the WSSC water budget because it is separately funded. So what we deal with, as Chair Glass mentioned, is we have a spending control limits process that establishes a rate ceiling that both councils vote on in the fall. And that provides the guidance to WSSC Water as they develop their operating budget. And of course, there's a very direct relationship with the CIP as well, since debt service is a significant part of the operating budget expenditures. So just keep that in mind as we go through this. The FY26 proposed operating budget is $1.14 billion, which is an increase of about $116 million, or about 11.4% from the approved FY25 operating budget. Now, you may immediately note that's slightly higher than the rate increase, and that's because they did have a slight increase in their revenue projections, which offsets a little bit of that rate increase requirement. The largest increase is in what's called the all other category. It includes a lot of different items, including a lot of contractual services, employee benefits, but also importantly, PAYGO. And PAYGO is one of the major drivers of the operating budget this year and actually the last couple of years. WSSC Water is recommending a significant increase in PAYGO of $42.4 million. And this is consistent with the discussions we had last fall and over the past several years, where they have been trying to ramp up the PAYGO to get to approximately 25% of debt issued. So this would actually, if this were approved at this level, this would be the first year that they achieve that metric. And the long-range financial plan, which is included in the packet, also assumes that PAYGO would be going up over time to continue those positive financial metrics with regard to debt service. So that's one significant increase in the operating budget. Without that increase, the rest of the operating budget would be going up about 7.6%. So just for context there. The other large increase is in the salary and wages category. WSSC Water is recommending 77 new positions. Also within that category includes their compensation assumptions for FY26, as well as annualizations of costs from FY25, similar to what you would see in other departmental budgets, basically creating the resources needed for the same services of effort from the prior year. Of those 77 new positions, 20 of them would be for newer enhanced services. I think about 28 of them were conversions from contractual services, so they're cost neutral. And then the balance, another 29 positions, were to deal with a lot of regulatory impacts that they're seeing. We had a discussion last fall, coincidentally at the same time as the spending control limits process, of the lead and copper rule, which is moving forward quite substantially over the next several years, as well as the PFAS issue, which is an emerging issue, which is also leading to some significant planning efforts and likely expenditures both in the operating and the CIP going forward. So that is one of the larger areas. Another area of increase is in the regional sewage disposal. These are costs that DC Water charges to WSSC Water based on actual flows going to the Blue Plains wastewater treatment plant. And in fact, in recent years, those flows have actually been higher than projected, and WSSC Water has seen some adjustment bills. And in fact, WSSC Water got another adjustment bill this year, so they will be having to absorb about $6.5 million more based on actual FY24. And then that's also led to a higher projection for FY26 going forward of about $1.7 million, which is not accounted for in the proposed budget. So that is something they would have to find within existing resources, either through higher revenues than projected or from reducing some expenditures in their proposed budget. So that sort of summarizes the expenditure side. On the revenue side, as mentioned, the 9.8% rate increase would also be followed by the similar increase in their fixed fees, which are the account maintenance fee and the infrastructure investment fee. That 9.8% would allow the budget to balance based on the expenditure assumptions I just mentioned. The other element here is the system development charge, which both councils also approve going forward. This is approved by resolution. For the first time in would be the lifetime of this charge, WSSC Water is proposing an increase in the charge of 2.5%. This would be in order to ensure that over the 6-year period going forward, if these increases were to continue, they could avoid a potential projected gap in their fund or a negative fund balance at the end of the 6-year period. Now, the councils, both Montgomery and Prince George's, do not approve multi-year rate increases for the charge, but the 2.5% would be for FY26, and then the councils could revisit that going forward, FY27 and beyond. But what this rate increase would do is it would avoid the need for WSSC Water to issue SDC fund supported debt, which it has done in the past where it's had gaps to fill. And I think given that the increases have not been done for decades, I think from staff's perspective, a CPI type of increase in the charge does make more sense to assume over time than having to go to debt to a more expensive debt assumption going forward. So the committee concurred with council staff on that for the system development charge increase. So if all of those are taken in total, then we would have a balanced budget going forward in FY26, apart from those regional sewage disposal charges that I mentioned earlier that would have to be accounted for. With that, I think I'll stop and see if there's more specific questions in any particular expenditure category or revenue category that I or our fellow WSSC staff folks here today can answer.
Great. Thank you, Mr. Luchenko. And I just want to have folks look at page 2 of the packet today under the committee recommendations, because we will be taking a vote on this today, as was stated, because we have our bi-county meeting on Thursday and particularly need to set the rate that we need to do with our colleagues in Prince George's County. So I see we have Councilmember Friedson.
Thank you to the committee for their work. Thank you to the commission and staff for yours. Has Prince George's County weighed in at all on the WSSC budget up to this point?
They're meeting tomorrow, I believe, for their full council. They've had a briefing and their equivalent of our T&E committee, their TIEE committee review. My understanding is they are still looking at their 9% base, just as we looked at our 10.2%, and WSSC is below ours. They're experiencing the opposite issue where WSSC Water's budget is above their base. So that's an issue they're wrestling with. I don't know if WSSC Water has any further comments on where they may stand at the committee level versus where they may land tomorrow.
Morning, it's Timothy Masara, Chief Financial Officer. We presented to the TIE committee at Prince George's County with the 9.8% enhancement, and during the meeting we justified and provide justification for what we had, and then the budget staff, again, as Mr. Levchenko said, presented the 9%, but also explained why we were at 9.8%, and we haven't received any feedback or any additional commentary from the chair of the committee. But again, when we presented the 9.8%, they were receptive and understood why we were presenting it at that level to support the needs of the operation.
In terms of process going forward, as was mentioned earlier, the bi-county meeting is on Thursday. This is always a quick turnaround. We recognize that. Based on the council's actions this morning, or preliminary actions this morning, we'll send a letter to WSSC Water and to the our Prince George's counterparts with the council's recommendations today. We'll get a similar letter from them based on their recommendations tomorrow morning. And between then and Thursday, we'll work at the staff level to create a joint staff recommendation for the councils to review and approve on Thursday.
Appreciate it. 9.8 is better than 10.2. I will admit that. I was more inclined to be more along the lines of where Prince George's was when we originally took this up. I still find myself in that position. I think that we should be closer to at least the middle of that. I think we could have then arrived at a compromise at 9.5. I'm not sure that would still be possible at this point, but I think we got to find a place where we can agree with our colleagues in Prince George's. So I'm not supportive of the 9.8 personally for the same reasons I noted previously. We've gone from 10.2 to 9.8, not by any expenditure changes as I can see, but based on revenue changes, but perhaps that was not mentioned properly earlier.
What we did, we found non-rate revenue savings. So our historical interest income, we were able to increase that based on the trends that we're receiving. And then within our long-term plan, what we did beginning with the COVID period, we had an allowable an adjustment for uncollectible accounts, and because our revenue trends were increasing, we were able to accelerate the removal of that by 0.5%. So that provided non-rate revenue that reduced then revenue enhancement request.
Yeah, there was one expenditure or significant expenditure.
Because that's more on the revenue side, but let's hear about the expenditure.
On the expenditure side, PAYGO was assumed to be slightly higher last fall. So what we're seeing is about a $5 million reduction from the PAYGO level from the fall that we saw in the base case versus what we're seeing today. That would account for about 0.5% of increased difference. So from the 10.2, that might get you, pretty close to the 9.8 there. But then as mentioned, they've had a number of revenue swings up and down. So it's not a perfectly straight line from the fall to where we are today. But the major expenditure reduction that staff sees is in the PAYGO being slightly down, still a very significant increase recommended.
Yeah, a 9% increase is a large increase. Over 10% increase is a very large increase. I just think we got to find something that's closer to where they were. They went up from where they originally started. We've come down a little bit, but I think we need to come down more to be in line with where most residents would expect us to be. So I'm going to respectfully vote against the committee recommendation as I did in the fall.
Council Vice President Joanna.
Thank you. Appreciate the background and the work that you've done to be lower than what I voted for before. So that's always nice. What would be the operational impacts? Could you just speak a little more about versus where Prince George's County versus 9 and 9.8?
So if we were to go down to 9.8, the main area that would be impacted would be PAYGO, and that would have the long-term impact of having us defer some of our capital projects.
Like maintenance? Could be more specific, because I think what you said is very jargony, and I know that, but I just want people to understand, and you said it was a perfectly correct answer. I understand what you're saying, but I just think people need to understand it is a big increase. They need to know that we're paying now, we're paying later. What this means we would be delaying.
Yes, so again, we have reset our replacement targets, and so by reducing PAYGO, it'll impact the plan that we have in place on certain projects which have historically been underfunded. We've realized historic breaks this winter, and that's just a sign
we heard about
of what was going on. And so if we have to change our current plan, it really relates to the project, and our acting chief engineer is here just to discuss some of that further.
Good afternoon. Kavil Stanbury-Woolry, acting chief engineer, WSSC Water. Thank you for your time this afternoon. So as our CFO mentioned, a lot of our infrastructure is in dire need of repair. And so when we don't get to them or don't attend to them in a timely manner, you do see what we experienced this past winter with the significant breaks. There are also, on our sewer side, we have significant sewer backups, and the residents do feel that directly. What they may not see is some of our internal operational needs or facilities or depots. They have maintenance needs that we have historically deferred, and with the not getting the rate that we've requested, we will have to defer those even longer. There are equipment that our team needs in order to operate effectively and efficiently. Those have been deferred, and we'd have to also defer some of those to subsequent years. So the impact will be directly noticed by the communities, but also internally with our workforce and how we're able to accomplish our work.
So it slow down the pace in which you're able to address things that need to be repaired.
Absolutely.
And obviously, when it breaks, it costs more to deal with it then.
Absolutely, yes.
Yeah, so I'll support the 9.8. Thank you.
Thank you. Councilmember Chair Glass.
I appreciate those questions, and I think we need to drill down a little bit more, especially over what we know happened over this winter. How many water main breaks were there within the system over the last 12 months?
There were approximately, over the winter season is where we really track it. I think there were approximately, it was about 1,700.
Say that louder.
About 1,700 breaks.
And how do we repair those breaks?
Those were done by emergency.
And how do we fund those emergencies?
We funded that through, we have a pot of money where we plan for emergencies, but again, since the rate of breaks was higher than anticipated, we had to pull from other sources.
So the rate is directly tied to our ability to fix water main breaks?
Yes.
Yes. We should not be playing politics with clean and safe drinking water. Nobody likes rate increases, but the rate increase here is the result of a number of different issues. First and foremost, it's aging infrastructure that has to be fixed, full stop. Secondly, it's because there's greater water efficiency in our community as we build new buildings, as we get new taps, and you get new appliances. There's greater savings, which means that there is less money actually going to WSSC on a per capita basis. And the confluence of that drives up this rate. And it is something that I know not only WSSC is dealing with, but water utilities across the country. There are conversations in Annapolis about rethinking WSSC as a bi-county, 100-year-old agency. There might be ways to rethink this, but at the end of the day, this is needed to have safe and clean drinking water. And unless there's another way to come up with the funding for it, I'm all ears. Thank you.
Thank you. Councilmember Natalie Fan-Gonzalez.
Thank you so much. This winter was horrible. I got so many phone calls from so many different people without water for days. Not an hour, nor 2 hours, days. And it's because we are living through an aging infrastructure that needs attention. This is not I may want to increase the fee. This is, we have to increase the fee. This I see it clearly based on what I'm hearing, based on what's happening in my own neighborhood. Glenmont, Aspen Hill, Veers Mill corridor, it was chaos. And I know WSSC must not love me, because I know I call you guys so often in a desperate mode, and you don't want to hear me in a desperate mode. And you guys were there for me. But the struggle is real. I also represent the County Council in COGS, Water Quality and Policy Committee, and Ms. Keisha Powell. She's always there in every single meeting. And we talked about this regionally. So it's happening here, but it's also happening in DC, it's happening in Virginia, it's happening everywhere. So I am in support of the committee recommendation because I have no other choice. This is it. Thank you.
Thank you. Councilmember Albanese.
Thank you. Appreciate all the comments from colleagues. I was on the record supporting the committee recommendation before. That hasn't changed. I guess I'll just note a couple of things. One is all of these fees obviously can't be looked at in isolation. We just had a long conversation this morning about a potentially proposed increase in our income taxes. And so our county residents are feeling increases both proposed by government entities and sister agencies, as well as the stress that they're feeling with the cost of inflation and everything else everybody's having to go through. So I just wanted to put this particular increase in context. It is painful, but I do think it is necessary for all of the reasons that were discussed last time and again briefly this morning. But I do think that, just as we have requested transparency within our Montgomery County public school system, I appreciate the great work that WSSC has done to increase its transparency, but I would just urge you to increase the usability so that when our residents feel the pain of this increase, they can at least see very clearly and plainly what this increase is going to pay for. And that will help soften at least some, not all, but some of that blow. And to know that it's also part of a broader strategic plan to increase capacity and infrastructure to keep pace as a region, I think will be important. I did have one question, and this is a similar question I've asked of executive branch agencies across the board, but since you're here, do you anticipate any cuts to our federal government funds impacting WSSC at this point? I know it's a moving target, but are you concerned about any of those projected reductions to capital projects at the federal level?
So we don't receive a significant amount of direct federal grants for our projects, our capital projects. What we do and what we're looking at is our state revolving funds, because Maryland Department of the Environment gets that from the federal government. So we're keeping an eye and monitoring that situation, because we have approximately 250 to 300 million in awards. And so we're looking to see whether there's going to be an impact in the new loan applications that we go into in FY26. So we're in discussion with them and monitoring that situation.
Thank you.
Thank you. Councilmember Mink.
Nobody wants to do increases when people are struggling right now, as alluded to. At the same time, we do have a responsibility to ensure that critical services are able to move forward, and our residents expect that of us. And so we have to be willing to make some of these difficult decisions. So, that's true in the rest of the budget, and that is true here. And, appreciate that we're coming in a little bit lower than last time we had this conversation, but noting that it's not going to be easy, not going to be much easier for residents, but this is a responsibility that we have. And this is also one of those investments where, if we don't make the investments now, it's going to be more expensive very quickly down the road. So I'll be supporting the recommendation.
Thank you. Councilmember Katz. Oh, sorry, Councilmember Lukey.
Thank you. I like Councilmember Friedson, did not support the higher rate last time because it seemed quite drastic, and I thought we could find a more middle ground closer to where our colleagues in Prince George's were. I also agree with what Councilmember Fanny Gonzalez said, right? We don't really have a choice. And I think that's what's hard in all of this for the residents too. Obviously, everybody wants clean drinking water. Everyone wants to make sure the infrastructure is safe. But when you have an overwhelming amount of things going wrong, and then they say, it's like, okay, yes, but now you're going to pay more to fix what you should have been getting already, if that makes sense. Understanding that, of course, all these repairs cost a lot of money, right? But to the customer, to our customers, they're going, well, why is it then now that we endured what we did in the winter, but now we have to pay more to get what we should have had? And that's the pain point, right? And also, and to Council Member Glass's point, who chairs the T&E committee, this is happening in other jurisdictions too, where the infrastructure, because it's all around the same age, is starting to fail at higher rates. And what plans does WSSC have to convey this in very straightforward, plain language, so that like folks can understand? And to what extent have extreme temperatures of the more recent years contributed to the structural problems that our water and sewer systems are having?
So I'll take the first part about the communication with our customers. What we have started to do is specifically with the CIP, we have, I think right now we've scheduled about 6 outreach programs just to discuss with the community what our CIP is and what we're doing. And some of it will be directly linked to that community. We've had several projects which have been ongoing, and because of some difficulties, we realized that we can't just go to the community and say that, look, this project has been ongoing and it's been delayed for a couple of years. We realized that we have to tell them what's going on and why it's happening. And that way, there's a linkage to what we're spending and what they're seeing, right? Because not every community sees a broken pipe or has an impact from a broken pipe. And so those customers also they'll have newer infrastructure or more reliable infrastructure. So we need to let them know that it's a system-wide event. It's not just community by community, because we don't receive revenue by community, we receive it as a system. So we're doing a better job in really letting them know what our plans are and what we'll be doing. So those community outreach programs are really important. And then I'll turn it over to Kuvril for the question about the age of the structure.
Sure, and I'll add to the communication. With each project that we are putting forward, we've also implemented a new process where we're trying to get to the community earlier in the design process. So one, that they're aware that the project is coming and how it benefits them. And then if there's any input that they want to provide in terms of how we're executing the project, they can provide that. We can also build on our lessons learned. So if they experienced another project and there was some negative impact to them, and they'd like to raise those concerns with us, again, we can have that documented and ensure that that gets considered into how we're executing the project. So in terms of communication, we're doing a lot to try and make sure there's visibility on what we're doing and how we're doing it and how it benefits the communities. We're also working on improving our In Your Neighborhood website that shows all of our projects. It shows the location and the scope, and it provides information on timelines. So that's a useful tool that the community can also utilize to know what projects are in their area and how it will be impacting them. In terms of how we are looking at just reducing, the impact of the aging infrastructure, we do have a department within WSSC that is looking at our infrastructure and resilience and climate change. And so we're not just trying to be reactive with the water main breaks, but we're looking at how we can optimize our infrastructure, how we can monitor and track any potential deficiencies and be more proactive in how we address those. So we're looking at those aspects as well. There's a team. We're just, not quite there as yet.
And thank you both for your responses. And I know they were tied to the projects themselves, and thank you for that. I think one of the things that I'm trying to get at here is my ask, because, we'll all get calls and comments from our constituents about the increases, right? So what I'm trying to get at is sitting here today, recognizing that hindsight is always perfect. Does WSSC say, hey, you know what, maybe we should have increased the pace of certain maintenance or refurbishment of things previously that would have mitigated potentially, maybe not, some of the more increased emergency things that are going on now. And this is our strategy for the future. Like those three things: owning kind of what had been, acknowledging what was this past winter, because everybody was pretty familiar with that and it was on the news every day, and most, if not all of us, were impacted by it. And then this is how we have been strategically adjusting for the future to take us in a new direction.
So I'll start, and then if Tim wants to chime in. We have a very robust asset management program that we are also expanding, and they will be looking at some of the questions that you've just raised. One of the things that we've had to do historically with, of course, limited funds is target the worst of our assets, right? So those that are in the worst condition. And so that's been our approach. Unfortunately, we try to address the worst, and then, right behind it, there are others. And with limited funds, we just couldn't do everything within the pot. So previously, one approach that there is to look at the worst assets and then the surrounding assets, because we're also trying to balance that with the impact to the community. So if we're there already, one thought is to just go ahead and do the surrounding assets that might be maybe not as critical condition, but right behind them.
But and it's cost effective.
It's cost effective. Okay. Yep. Or do just target the worst assets, and then you may have to come back in a year for the others right behind it. So it's an assessment that we're looking at internally through our asset management. And as I mentioned, they've been recently expanded. So we are looking at those questions.
Thank you.
And one thing that we're doing is that in FY26, we're going to have a master facilities and master planning contract. So we're going to have a vendor really go out and make an assessment in conjunction with our engineering department, and then make the recommendation of how we address some of the other plans, because historically it's a 1% per year replacement target, so that every 100 years you refresh.
Right.
And that's what all utilities try to do, but then there are times where it's difficult to reach that target because you have areas that you don't control, such as permitting and various other requirements. And so by having this formal plan developed and in place, we'll be able to adhere and then really communicate to everyone what the targets are and keep ourselves honest by broadcasting that information.
Great, thank you.
All right, Councilmember Katz.
Thank you, and I'll try my best to be brief. This is not cosmetic choices. We need to do this, and that's what is very necessary. For the new materials that you'll be putting in for the infrastructure itself, have they improved over the years? I mean, some of this infrastructure that's there, is it 50 years old? How old are some of the pipes that you have to replace?
So the ones that we're replacing a lot more now are in the 60s. A lot of our recent projects were installed like in the 1960s, and we're replacing those the 1950s. So, yeah.
Were the materials better then, or are the materials better now?
They're better now. So we're using updated materials, different coatings to help reduce the rate at which they deteriorate. So there have been improvements. So that's one thing too that we're doing differently. And every day something is being. There's a new technology that we're assessing to see if it will be beneficial for our use in our infrastructure as well.
And for the I think you said 1,700 breaks that in an average winter, how many breaks do we normally have? You don't have to be exact. I
think it is around the 800 mark.
So this was twice as bad. Yeah. No, there's no choice. We have to do it. Thank you.
Thank you very much. And I I will say, living in the Tacoma Park Silver Spring area, and I know you all are very responsive to it, but just got another alert right now about a break. And I know, I will say, having worked with WSSC almost probably going over 10 years now, improvements have been made in terms of responsiveness, informing the community. And I know, as Councilmember Lukey says, we can always do better. But I will say that especially under General Manager Powell and all of you over the last few years, I have seen a marked difference in the communication, the responsiveness to residents, and so and us. And so I just wanted to say thank you very much. I know you're dealing with a lot. So I think since we have some council members who may not agree with the committee recommendation, why don't we split these three items? Ms. Lechenko, let me know if I do this correctly. The first one is committee recommendation was to concur with WSSC Water's proposed 2.5% increase in the system development charge for FY26. We will take another action on this later in mid-May, but all those in favor of the committee recommendation on this item, please raise your hand. And that is unanimous. Then we'll take a straw vote on the next two, and these are the ones that we will go to our counterparts in Prince George's with. The first is concurring with WSSC's proposed FY26 operating budget expenditure and also the proposed 9.8% rate and fixed fee increase for FY26. All those in favor with the committee recommendation on those 2 points, please raise your hand. And I have 1, 2, 3, 4. So it's 1 to 10. 10 to 1, sorry, on that. All right, and thank you so much for your patience today. I know you've come back to us a great deal, and we really appreciate the ongoing collaboration.
Thank you.
Okay, thank you. All right, we have one other item, and then we're going to break in our afternoon session. We've bumped to 1:30 to give us a bit of time. The last item we have is the Washington Suburban Transit Commission. I think Mr. Kenny is coming down. I don't know if Chair Glass, if you have anything to speak to this, or should we just turn it over to Mr. Kenny?
This is pretty quick. The T&E committee sent it to full council without our own deliberations because it is a relatively small regional item. So I'll let Mr. Kenny explain.
Thank you. This is the Washington. This is another one of those bi-county items that you all will review with the Prince George's County Council on Thursday. So this is your opportunity to look at it prior. The Washington Suburban Transit Commission sent us over their approved administrative expense budget to the amount of $536,923, of which $167,845 is the Montgomery County's share. This represents actually a decrease of about $6,000 in the total administrative expense budget, and an $816 decrease in Montgomery County's share from FY25.
Okay. Any questions on this? No? All those in favor of the recommendation, please raise your hand. And that is unanimous. So we will take this to our bi-committee meeting on Thursday. As the clerk previously noted, item 8, Office of Emergency Management, Homeland Security, and item 9, Fire and Rescue Service, have been rescheduled for Thursday, May 7th. We will now be in recess until 1:30. Thank you, everyone.